Hello, hello, hello. Can anybody hear me at all?
Yes.
Yes.
Good afternoon, everybody. Uh, Welcome aboard once again. We're already in our second week. Time flies for sure. So first things first, let me do my register and then we can get on with what we need to get on with. Of course, once I'm done, if you have any questions that you may wish to ask before we get into the lecture, please feel free to do that. I'll just be doing a bit of housekeeping, one or 2 points I need to make, and then I'll be happy to answer any questions you might have going into this afternoon session, and then we can jump in. Okay. Shatanya, Banaby.
Good night, right here. Good night, everyone.
Dylan, good night. You made it. Okay, Eugenia, Edwards.
Good night.
Night. Perfect. That worked. Danielle, Hannah.
Good night.
Okay, good night, Danielle. Welcome back. Shalisha. On the way, I imagine. Okay, Leslie.
Here.
Okay, yes, welcome aboard, Leslie Roberts. Atalia Robinson.
Here. Yep.
Excellent, excellent. Ellen Strawn.
Yeah, good evening, everyone.
Everyone, is there somebody's name I didn't call? It looks like we have, let's see, 1, 2, 3.
You would see E. Wilson name up twice because one is the computer that I would read from.
Okay.
If any notes come up, and then my cell phone is connected to the video and like the voice. So you would
Okay.
see my name pop up twice.
Okay, so you're double in this one.
Yeah.
Any other doubles? All right, perfect. I guess Shalisha will join us as soon as the smoke clears. All right.
Hi, good night, Mr. Wilkinson. I have a question. Well, a few actually.
Okay,
Because I wasn't in class last week.
okay, correct.
So I just wanted to know how long the course was.
Okay. How long is this course?
Yes.
This course, Leslie, is 10 weeks long. Today
And-
makes the second week, yes.
Uh-huh. And when is the paper due?
Okay, so you're getting into the nitty gritty. Hang in there then. That's part of my
Oh.
keeping.
Okay.
If I don't say something that you need to hear, then go right ahead and ask me, okay?
Okay.
Okay. First of all, did everybody get the notes that I sent?
Yes, I got them.
Okay, great. Now, what I'm going to do is after every
Sorry,
session.
excuse me, Mr. Wilkinson. When you say notes, you mean the information on the research paper and course outline?
No, you should have gotten some lecture notes.
No, I didn't. I didn't receive that.
My. On your roll. On your roll would be. Oh, Shatanya. You should have gotten that, Shatanya. I have your email address as Benaby something.
Sorry, one moment, please.
Shatanya?
No, I didn't see the notes unless I didn't scroll to the email properly. I saw the course outline and the research paper information.
Yeah, actually, I sent 2 emails. One with the lecture notes and the other one with the course outline and research paper.
Oh wow, I have to go back to my email, but I didn't see the lecture. I'll
Yeah,
go back to it as well.
yeah.
Okay.
If you got the first one, If you got that one, you should have gotten the other one. Okay.
Okay,
So,
I'll
yeah,
scroll
you
back.
may have been breaking the speed limit when you were going through your email and perhaps missed that one. So you can take a look. If after taking a look, you still don't see it, then let me know so that I can resend it. Okay?
Okay, thank
Yeah,
you.
no problem. And so what will happen is after each session, I'll send you another set of notes. The plan is to send it within 24 hours after the class so you can have time to review them before the next class. But you, in your case, you have the rest of the week, the weekend, and all that stuff. So my plan is to get it to you within 24 hours following each class. Altogether, there'll be about 7 chapters that we'll be doing. I think I made a note here that you are going to have from our first sessions, you're going to have a midterm exam and a final exam. Please make a note that the midterm exam is going to be in week 6. Week number 6. What date is that? Anybody has a calendar? We are now in week 2. When will be week number 6? Which day and date?
November 3rd.
Yeah, November 3rd.
Okay, November 3rd. And then your final exam will be week number 11. Which date is that?
I thought you said the class was only 10 weeks.
Yeah, the 11th week will only be your exam.
That would be December 8th.
December the 8th?
Mm-hmm.
Okay, great. So well before Christmas, no stress there. All right, so please make a note. Your midterm will be week number 6, November the 3rd, and your final exam will be week number 11, no, December the 8th. The good thing about doing it the week after is you have an extra week to prepare. Plus, if you have any questions or concerns, you can raise them before your final examination. Let me say also that your exams will not be cumulative. By that, I mean, once you've done with your midterm exam, you will not be tested again at the end of the semester. Your final exam will consist only of material covered after the midterm exam. Okay, so there will be no cumulative exam where you have to go back to the beginning again. Any questions so far? Okay, the research paper, I have a few instructions on the research paper in terms of the number of pages. Please don't plagiarize the font size and all that good stuff. I'm hoping that everybody understands what I mean by plagiarize. And thanks to Google, you shouldn't be puzzled for too long. But basically it means not taking other people's information and calling it your own. If you're quoting somebody's stuff, you have to say that you're quoting their stuff and indicate where you found the information. That's the proper thing to do. I don't have a problem with cutting and pasting sometimes as long as it's supporting some kind of point or argument that you're making in your discussion. I'd rather you not grab somebody else's something from somewhere and call it your own. That's the ultimate madness in academia. Don't do that. And for lecturers who've been around as long as I have, I can smell a rat within 15 seconds flat, unfortunately. Sometimes I hate that, but experience is hell. All right. So the idea is research paper should be yours. You can quote other people, you can copy and paste stuff as long as you make reference to the material that it's somebody's work quotation. And of course, at the end, please put some kind of bibliography to say you got your information from blah, blah, blah. That would be great. Do I expect you to come up with some world-class research paper like in the University of something? No, of course not. But I do expect you to be as diligent as you can and produce the best paper that you can, which is why I've submitted it early. The paper is not due until the end of the semester, which is week number 10. However, If you finish the paper before week number 10, feel free to submit it. You do not have to wait. Whatever you do, don't wait until week number 9 to begin. It will be a nightmare for you. And usually, unless you're one of those extraordinary students who do that crap under undue pressure, you're not going to get the best results. Right? So please try to start as early as possible, do a little bit at a time. Each weekend, do your best work so that before the 10th, you can be done, have enough time to review it, have somebody reread it if you want to, have it nicely typed and organized, looking really nice, and then you can submit. Okay? All right, any questions on any of those issues? Okay. Feel free to raise questions at any time. In our sessions, we don't need to wait until the end of the session. You can just interrupt me at any time and raise your question. Not a problem. All right, Leslie, you were not here last week. Maybe you can introduce yourself to those of us who do not know you.
Okay, good night, everyone. My
Hi,
name my name is Leslie Roberts. I am employed with Bahamas Mortgage Corporation. This is I'll be doing the second class. I've done the Credit and Collections 1 class. I'm excited and looking forward to this class because I've learned so much in the first one, and I just hope to get more information in the second class.
Thank you very much. Welcome aboard. For those of you who did part 1, you'll see part 2 is a little different from part 1 in terms of content. It has a different kind of information. Some of it overlaps, but for the most part, the information is a little more extended than we did in part 1, which is how it's supposed to be. Some of it might challenge you a little bit more, which is what it's supposed to be. That's what part 2s are about. Unless you're watching a Hollywood movie, it doesn't matter. But in academia, when you do a part 2 of something, it means you're stepping up to something more. So you'll see some things that are similar, and then you see some things that are like, really? Is that part of credit collections? I didn't know that. All right? Because parts of this material that you'll be doing this semester will also include credit from a non-banking perspective, which will be a little different. In other words, trade, what we call trade credit between companies and vendors who sell goods to each other around the world, including the Bahamas, okay? And the kinds of credit that are extended by them and the language that they use. So for those of you who are financial services people like bankers and credit union people and mortgage companies, you'll find that that part of the language might be a little different for you. But the whole idea is to give you a rounded perspective of what credit is all about and to let you know that credit is not just a loan that is given in a bank, a mortgage company, or a credit union. Okay? Because one day they might kick you out of that institution and then you have to go and work for maybe Kelly's or some other major retail company, and they offer credit to their clients. And then suddenly you're talking about all kinds of trade credit stuff and using all this expert stuff that we're going to learn this semester that you thought, man, I don't need that. You never know. Okay. The other thing is, even as you learn new and different perspectives for credit and collections, you never know it as you move around, even in your existing job, things come up, you hear stuff like, okay, I get that, or something happens in your personal life, and then you have that information. Or for some of you, you might even have your own little something on the side already, or eventually one day. And so all of a sudden, this newfound type of credit and language becomes useful along with the stuff that we already did previously in credit collection 1 and to some extent in part 2 as well. So hang in there as we go. If you do see anything that looks a little spooky, don't worry about it. It'll all come to fruition eventually. Okay. And again, if we're chatting about anything or we come across anything that
I just tell you, do not touch it.
That is a little weird to you. That would be fine. Just raise question. Okay. All right. I remember those days. I can't believe it. Time flies. Can everybody still hear me?
Yes.
Okay, fantastic. All right. If there are no questions at the moment, then let's jump right into introductory discussion. Those of you who have the
I can't hear you no more, Mr. Wilkinson. I can hear a roll background a lot.
yeah. Is anybody else getting something in the background? Can you hear me now?
Yeah,
Yes.
background noise.
Yeah, somebody's mic is open where there's some action going on.
That mic is Tanya roll.
Tanya,
Oh my goodness, sorry.
I don't mind the mic being open. I know you have to settle things down. That's fine. We just wanted you to know that we were hearing all the action in the background. So don't say anything out of the way. All right. So let's go to our introduction to credit and collections part 2. Again, the first part of this semester will be primarily credit discussions of all different types. And then later on, maybe in the last 2 sessions or so, we'll talk about a few other collection concepts that hopefully you can add to what we did in part 1 and kind of strengthen your collections perspective. But I'll admit first and foremost that the majority of the focus will be on extended and different types of credit. And then of course, down the stretch, we'll close with some more collection techniques and activities that will hopefully be of benefit to our collectors in the room. All right. So we would all remember from part 1, anybody remembers the definition of credit? Let's just, let me be the devil's advocate. Anybody remembers what credit means? What is the definition of credit? When you hear the word credit, what comes to mind?
Mr. Wilkinson,
Yes.
I'm not too sure if everybody else was in collections 1, but I know I wasn't, and this is my first time in the collections course, so I may not say as much because I'm just learning for the first time.
That's fine. No problem. No problem. All right. So yeah, you just wrote. And as we go, if you have any questions that you need to raise to clarify things, it's like, what the hell does that mean? Please do that. Don't just let it go over your head. Okay. All right. Any definitions? What is credit? Anyone?
I have one. Credit is a written agreement between a lender and borrower to borrow monies, items with terms and agreements to pay back.
Sounds good to me. Anybody else can add or subtract to that? That's fantastic. Preferably a written agreement. You don't want to do credit. Some people do credit by word of mouth. Can we do credit by word of mouth? Anyone?
Nope.
Yes.
Yes.
Yeah.
No?
You can, but it's not a good idea too to do so.
It's not a good idea. If you're giving credit to a family member or a friend or something like that, perhaps you can do it informally. And for some people, that may still not be a good idea. Okay? For example, they'll say, you're my family member. Can you lend me $300 until I get my ASU draw next week? And since you are trying to be a nice family member, you take your last $300 or your first $300, give it to them, believing that they'll pay you when they get the ASU draw next week. Will they pay you? That's a verbal agreement. They say they will pay you, you say, okay, you give them the money and you're waiting. That's a credit transaction. That's not written, but it's still credit. Will you get paid? And do you think you'll get paid next week for the ASU draw?
Yeah, sometimes.
Sometimes. Yeah. We hope you get paid, correct?
I think that's where when you don't have a agreement in instances like that, that's where the credit worthiness could come in. If you're lending let's just say a family member money, you already know this person is a person that don't like to pay back, or a person who will to borrow money but never pay back. So if
Yeah.
you're lending money to this person with this character, then 2 to 1, they probably won't pay you back.
Man, I'm so happy you said that. Who said that anyway?
Leslie.
Yeah, Leslie. I'm happy you said that because you said a lot of important things about credit that we discussed previously and we're going to be discussing in this semester. And that's about people's character, the person who you are lending money to. Oftentimes, if a person has a good character, you don't even need a written agreement. We have something that we call a gentleman's agreement, correct? Have anybody ever heard about a gentleman's agreement?
Not at all.
My. Amazing. You guys haven't heard about a gentleman's, am I that old? Okay. A gentleman's agreement is an agreement between two people, not necessarily two gentlemen. It's just called a gentleman's agreement, where they agree to do something and they don't sign any paper because they believe that the one or the other will follow through. They trust them. That's a gentleman's agreement. So they shake hands and they walk away believing that it will be done, whatever it is, including credit. Gentlemen agreements were common because people trusted each other and people lived up to that trust for the most part, not 100%, for the most part. Okay? The problem is gentlemen agreements don't always work because sometimes you have persons whose character does not have the substance to enter into a gentleman's agreement. Somebody, like Leslie said, if they have that kind of character where they don't like to repay as a matter of practice, and you shake hands with them, you probably may not get your money. So when you come into a gentleman's agreement or verbal credit agreement with somebody, it should be preferably somebody whom you trust for some reason, whom you believe will repay you. If a family member comes to you as a reputation for not paying, don't expect to be paid. Let them shock you and pay if they do. But typically, if they have that reputation, you probably won't be paid. You may want to say, I'm not lending it to you, I'm giving it to you, just don't come back anytime soon, or I don't have the money to lend to you because you don't want to take that risk. Okay? So yeah, character is one of the big C's of credit. It is always one of the big C's of credit. Okay? And we might come across a couple of the other C's before the semester is over. We saw them earlier in part 1. All right. But in business, that's the personal side of credit. And sometimes on the personal side of credit, you should still do a piece of paper, type up a document, and type on it. This is an agreement between me and my cousin John. He promised to pay me $300 from his ASU next week on the 30th of the month. And he said he ain't joking. He really gonna pay me back. Sign. And John, you sign here, I'll sign here, and so on. And of course, if John doesn't pay, you can use that, even that informal written agreement, to take John to court. Should you take family members to court? Collectors?
Yes.
Yes, without hesitation. Some people don't believe you should. If they find that you've taken a family member to court, everybody gets mad at you. Like, you're suing your family, but they forget that the family didn't do what? Pay you your money that they promised. Yeah. It's funny. All of a sudden, people forget that you're suing because they didn't pay, and they start messing with the person who's suing rather than mess with the person who didn't pay. It's just like in the world of stuff happening, where, for example, if somebody harms or murders somebody, for example, after a while, if we don't be careful, we start sympathizing with the murderer and forget about the person who is. Anyone? Murdered. Common problem. Oh, Lord, I feel so sorry for Johnny. They can kill him now on that gallows. Okay. Johnny should have thought about that when, class? When should Johnny have thought about that? Am I the only one in this class?
Sonny should have thought of that before he murdered the person.
Yes, absolutely. Before he took that woman's life or man's life. And they're gonna still be dead and they're never coming back and they're never gonna get married and never gonna because of Johnny. Now we're sorry for Johnny? Oh, poor Johnny, they can break his neck. But what about Susie, whom Johnny mutilated after he raped her? How about her? Anything there? Strange. And so we have to be credit is I use that so you could remember. Credit is kind of like that. If you sue somebody for the money they owe you, if you don't be careful, people start coming after you for suing them and forget that they owed you money. That's a strange phenomena. Okay? Of course, lending institutions don't worry about that. They'll run you into hell if necessary to get their money back, including suing you in hell. That's just how it works in the real world of business. But of course, personal lending is, of course, a little different from business lending. Our focus will not be primarily on personal lending. It'll be on business lending. Okay? So yeah, credit is that written agreement where one promises to pay at a certain time, and we hope that they pay the money. Credit is giving up something now with the expectation that you'll be paid later. So when you go into a store and they give you credit, they're giving you their stuff, believing you're going to pay them. That's a hell of a risk to take. To see people walking out your store or you're shipping it to them on the promise that they're going to pay. That's a hell of a risk. But companies do it all the time. Do they lose money sometimes? Of course they do. But they're hoping that they make more money than they lose. That's why they have collections departments as well. So when people don't pay, they run them down, put their name on the credit bureau. By the way, did you guys know that we have a credit bureau now?
I know you had mentioned that they were in the talks of it, but I didn't know that it was official.
It is official. It just hasn't been officially presented to the country. But it is 90% ready, and soon, maybe before the end of this year or early next year, the credit bureau will be up and running. So all of you guys who lend money, when people come in for money now, for a
A lot
loan,
of Bahamians can be a problem.
absolutely. See, the financial services environment, like the central bank and other bankers who, they want to make sure they get their money back, which is fine. This is great for the Bahamas. Yeah, it's great for financial institutions who lend money, of course. But is it great for the customer? Uh-uh. Some people believe like, yeah, this is great because now those bad paying people won't be able to borrow money. That's true. But in some cases, some people who are not bad paying will not be able to borrow money either. Because once the information is compiled on what they have out there, they will not be able to borrow either, nor will they be able to make any deals about it because the credit bureau will indicate what their credit rating is based on their credit score. And it doesn't matter whether they need it dead bad. If that credit score is not what it's supposed to be, then those persons and many of them will not be able to borrow. So I suspect now that the ASUG thing will probably become even more popular than it already is, because people will have to find a way now. If they can't get the money from financial institutions, they will have to find a way to get the money. Okay? So yeah, the credit bureau is here. It's a good thing and it's not a good thing, depending on whose perspective it is. We just now have to wait and see how it all pans out and what impact in another 3 to 5 years it really has on the borrowing public. The lending public, like banks and financial institutions and unions, they're happy about this. Because now they can track down customers and all their loans are and get a picture on a sheet of paper about what they're doing. And then say, yes or hell no. So lenders are ecstatic about this. Borrowers are like, oh my God. Good borrowers, people who can get loans fairly easily because they have great jobs, great background, great assets, and whatever, they're like, cool, great. But those persons who are in the average and below, which is a significant number of Bahamians, life is going to be a little bit different for them when this whole thing kicks in, especially the working class people.
Mr.
And
Wilkinson, sorry, can I interject?
definitely,
I feel with that topic, there are some pros and cons. For the borrowers, it allows them to not borrow, over borrow.
yeah,
It will be able to help them in a way, because there are some companies that allow persons to go over their TDSR. I hope
yeah,
I pronounced that correctly.
you did.
But for the lenders, that could be problematic too, because some of those persons that's over is actually were keeping some of these businesses open,
No doubt
because
about it.
they are borrowing and they are over
Yeah,
their
TDSR.
debt service ratio. But at the
Yeah,
same time, I feel like that question has pros and cons.
no question about it. And time will tell what the real impact of that would be on the economy. Um, if lenders stick hard and fast to the rules of the credit bureau, we might see some shrinkage in lending and borrowing because people will not meet the criteria in many cases. And then the question will come up, will the lender still have any wiggle room? Okay, if the debt service ratio is supposed to be 40% or less, can you go to 42% without making a big fuss? Can you go to 45% if necessary if it's an emergency for the customer, and so on? Or maybe even 50% in an extreme emergency. For example, you may not go over the debt service limit if they want to go to Egypt again. Like, I've been to Egypt, it's been so great on those bloody camels. You don't want to do that. But if it's a matter where somebody is sick, for example, and they can prove it, or if the child doesn't get that semester, they're going to get kicked out of university, things like that, we may want to know what the wiggle room is for those kinds of things, okay, for sure. Loans for what we consider to be quote unquote unimportant stuff like vacations and that kind of stuff, to save the money, wait a while. We may not worry about those so much, but certainly we would want to know if there could be any wiggle room occasionally for important types of loans. So yeah, you're right. There are the pros, cons. Time will tell how that is going to pan out in the Commonwealth. That's for sure. That should be interesting for all of us as borrowers and lenders. Because remember, we're all borrowers in one form or another. And even if you're a lender, you're a borrower as well. So if you're a lender now, you're going to be on both sides of the fence. And that should be interesting as well. Okay. So the months and 2 to 3 years ahead from now, when the bureau finally kicks in, it would be interesting to see how that pans out. I understand that that bureau may not be located in the Bahamas. I'm not happy about that. I hope that that is not so, but I'm hearing that it's not going to be in the Bahamas, it's going to be somewhere else outside of the Bahamas. So all of our financial information is going to be floating around somewhere outside the Bahamas, if that thing is true. That's another issue with the credit bureau, and I guess time will tell how that pans out. Okay. So you guys who are in credit and collections, you remain in a very interesting and dynamic and exciting area. And this credit bureau will only add further excitement to your already maddening lives. Okay, so buckle up and get ready. All right, I think I've talked enough already for the moment. I need somebody who is going to begin my reading session for me. Tanya, I'm sorry, you're on the top of my list. I'm starting from the top and I'm working my way down. So I'm going to start with you, Tanya. Can you read the first 2 pages for us, beginning with the introduction, and then we go from there?
Can I have a pass for tonight?
You need a pass?
Please, for tonight.
Okay, we are going to hold you to that. Everybody's made a note. Tanya's gotten a pass. Next week, we will pounce on you like hungry lions. How's that?
That's fine.
Okay. Eugenia, are you there?
Yes, sir.
Okay. I know you have a little one. How old is the little one?
I have a 1-year-old and a 3-year-old.
Kiss my foot. Boy, you're
So
in
right
big
now,
trouble.
right now I'm on the phone with you guys and taking up their food.
I'll come back to you, Eugenia. 1 and 3, you have my condolences. All right. We'll come back to Eugenia in a little bit. By that time, she will have finished taking up dinner for that gang who will drive her completely crazy without question. Okay, Danielle, are you there? Danielle, Hannah.
Yeah, I'm here.
Okay, Danielle, save us all. Why don't you start with the introduction? The first 2 pages.
Okay. Oh, dear God. Many words paint definite pictures or create specific attitudes as soon as we hear them. Credit is such a word. It has always meant something of value, something we want. As youngsters, we tried to be a credit to our parents. At school, a credit was another step toward a diploma or degree. As we became independent consumers, we found that something else of value is called credit. It is the confidence and trust placed in our intention to pay at some later date for goods or services received today.
Take a pen.
Mhm.
Take a pen, Danielle. I just want to mention at this point, notice right at the very top, it is the confidence and the trust. So those of you who are lenders and borrowers, it's a two-way street that lenders have to trust the borrower and the borrower has to live up to that trust that they're going to pay as they say they're going to pay. Okay, that's the big deal right up front. Okay, keep going.
Thus, our initiation to credit as something of value in the world of business takes its most common form in the charge account. Installment sales and loans from banks and finance companies are other forms of consumer retail credit. The store, bank, or finance company, before entrusting us with merchandise or a loan, first makes the determination that we are indeed willing and able to make the required payments.
Yes.
If we show evidence of financial responsibility with steady employment, a bank account, and if our payment record elsewhere is satisfactory, we are normally granted the reasonable credit that we seek.
Stop for a second again, Danielle.
But-
Sorry. You're just saying all kinds of interesting things right at the very outset of this class, because this stuff that you're talking about now forms the very foundation of the job that you guys do in credit and those of us who are borrowers, which is probably all of us, okay? And notice also, she says the store, bank, or finance company. So we're not only talking about a bank or a credit union, we're talking about retailers and other finance companies that give credit. They all have the same expectation that the borrower is willing and able to pay and that they will pay. They will take the responsibility. They have the employment stability. They have the bank account. They have the basic requirements that will encourage a lender to lend money, whether it's a mortgage company like the Mortgage Corp, whether it's a finance company like companies that might give short-term loans, whether it's a bank that does consumer and commercial loans as well as mortgages, whoever the lender is, or even a retail store like Amazon. Does Kelly give loans, by the way? Credit? Does Kelly's give credit? Anyone? Kelly's. Do they give credit?
In Freeport, they do with bonds, through a bond. If you have a bond license, or some companies, they could get it on credit, and then they have a certain amount of time to pay it back.
Indeed, from one business to the next business, they do that. However, I don't think they give retail credit to persons coming into the store to buy goods typically. So if you go to Kelly's in the mall here and say, I'd like $300 worth of credit, they'll run you out of the store. I've never seen them give credit to anyone in my lifetime, not at that retail level. certainly maybe at the wholesale or business level, like you said, under the bond arrangement because they're secure. And if something goes wrong, you kick the bond in and do some other things. Okay. But typically, no. But all other organizations who give credit, they have the same expectation that she's talking about, Danielle. And this is the foundation of everything we're going to be discussing in credit. Everything else we're going to be discussing is going to be heaped on top of that concept that she just talked about. All right. So let's go. Keep going, Danielle.
Sorry,
But
but
beyond
where are we reading from?
Oh, page 1,
Thank you.
third paragraph. Yeah.
But beyond consumer credit exists another type, infinitely more complex and sophisticated, the credit that business firms extend to other business firms. This is the credit that enables companies to buy more, produce more, sell more, employ more, and earn more. This is the credit that has given rise to a profession, a rapidly growing body of skilled men and women responsible for the extension of credit and its collection. This is the credit we are concerned with in this course. The credit used in the sale of merchandise by a producing, manufacturing, or wholesaling company to another business along the economic pipeline.
Now notice what is happening. Part 1, we beat the credit that we do through banks and financial institutions and unions and so on to death. We talk primarily from that perspective. Now, in this section, we're going to allude to some of the same techniques, but we're going to be focusing a lot on a unique group of persons who give credit, and that is from one business firm to another. The interesting thing about this is a kind of credit that we don't necessarily hear a lot about from day to day because we're so used to that car loan, that property loan, that house loan, and that kind of credit that a lot of people don't even know that credit exists between business firms out there who are wholesaling and retailing. But they are out there doing multi-million-dollar credits between each other, believe it or not. And so we're going to see a lot of how they function. And you'll see some similarities to what we do in financial institutions traditionally. And we're going to see some very different things in terms of how credit works. And this is the whole idea about having a part 2, so that by the time you are done, you're not just stuck on the one half of the credit, which has to do with mortgage, consumer, and that type of loan, but you also have a broader perspective in terms of other key types of credits that are out there in the millions and billions of dollars in the real world. Because you never know. Today you might be giving credit in a financial institution. Next year you might be doing credit in a wholesale retail entity. Who knows? All right? The world of work is very unpredictable. Either way, credit is credit, still has the same perspectives. Just you'll see the differences as we go. All right, keep going, Danielle.
Types of credit. Our subject then is merchandise credit, for that is the name of credit extended by a business firm when it sells merchandise or services to another concern to be paid for at a later date. To orient our field of interest properly, we should mention that our topic is but one of 5 types of credit: consumer credit, public credit, investment credit, buying credit, merchandise credit. Consumer credit has already been defined as the credit granted to an individual by a store, bank, or finance company. Public credit is the credit obtained by a government, local, state, and federal, and by government agencies. The most familiar form of this credit is the U.S. government bonds sold to the public. Investment credit refers to loans to business firms granted primarily to earn interest for the lenders and scheduled for payment over a period of years. Such a loan may often have the security of a claim against some property of the borrower, as in a mortgage loan. Another familiar form of investment credit is represented by the bonds of a corporation. Buying credit is the credit extended in the form of a temporary loan by a financial institution to a business firm. The loan is usually granted for a short period and its primary purpose is to help a business acquire supplies and inventory. Merchandise credit is defined as the credit granted by one company to another for goods or services to be paid for at some time after their delivery to the buyer.
Okay, stick a pin again, Danielle. You keep saying interesting stuff, and sometimes I'll let it roll over, and other times I'm gonna say, man, this is something I need to say something about. So now, if you didn't know before, you're certainly reminded in this little excerpt that she read about the key types of credit out there. And if you don't remember anything else from the semester, you need to know the different types of credit. I'm sure you will remember much more, but I'm just trying to keep you focused on the fact that credit has many faces, but the end result is the same. We trust you, we expect you to pay us back, we'll give you something, and we expect you to pay as promised, okay? So the consumer loan, we know that loan from part one, and maybe just in general knowledge, okay? These are usually loans to individual persons, whether it's a bank, finance company, or whatever. These are personal loans. Another name for consumer loan is a personal loan. Public credit, as you can see, is a government loan. Do we have government loans in the Bahamas? Yes, we do. The US government bonds are sold to the public. We have Bahamian bonds that are sold to the public as well, by the way. And the reason why the central bank sells Bahamian bonds to the public is that they want to raise money for the government. And then when the bonds mature, 3, 5, 10, 30 years down the road, then the government will pay back interest as well as the total amount that they borrowed from the public. Okay? So when the government is issuing bonds again, and you guys have like $5,000 that you don't need for about 5 years, you can buy some government bonds, and then you'll be part of the public credit process. And what the government will do is every 6 months, they'll pay you interest on those bonds. And then if it's a 5-year bond, then they will pay the face amount at the end of 5 years. So you collect interest every 6 months, and then at the end of 5 years, you get your principal back. That's how these bonds work as part of the public credit. And that's how governments around the world, including the Bahamas, raise money for projects. Hopefully not to waste, but to put to good use. Okay? If you don't know already, you should know that governments are famous for raising money through bonds, through taxes or whatever, and then not using it all very efficiently. So that's public credit. Then we have the world famous investment credit, which is kind of like a mortgage type loan in some cases, or cash-based loan in some cases. But the idea is the lender is taking collateral, which is what many of you guys do where you work, especially those of you who work for a mortgage corporation. I'm sure you will not do a home loan without taking the property as collateral, such that if the client does not pay.
Believe it or not, though, sorry, Mr. Wilkinson, believe it or not, Bahamas Mortgage does not use collateral.
You kiss my foot. You're kidding me.
We don't. I mean, Danielle or Ellen, I don't know if you want to piggyback, but as far as I'm concerned, we don't use collateral.
So, I mean, that's the mortgage corporation is a very public corporation. In fact, it was developed for the public. So it's not like some clandestine thing that anybody's trying to hide. Mortgage corporation has been around forever. And I'm glad you said that, because a lot of people believe that automatically when you go to the mortgage corporation for a mortgage loan, that they are going to hold the property or the house that you live in as collateral until the loan is paid off. That doesn't
Sorry,
happen.
Leslie, and how much do you guys lend up to?
We have a government guaranteed is 237,500. We can go up to 300,000, but it'll have to be approved by our board.
So you can actually give a loan for a house up to potentially $300,000 without taking a first demand legal mortgage on the house that the person is living in?
Oh, wow.
No, we hold the house as collateral.
Oh, okay.
No, we
That's
would
fine.
hold what we're paying mortgage, what they're paying mortgage on. But if they come in and they say, hey, I want to get a house, I have a property that you guys can hold and put on collateral. We don't do that.
What do you do?
Now we would have our whatever you have a mortgage with us on, like if you have a property mortgage or if you have a home mortgage, now we own that until you pay that off. But
Right.
if you have any other assets, we don't hold them as collateral.
Point well taken. In other words, the mortgage corporation will not hold a car as collateral to borrow $3,000.
No,
No.
You're
Your collateral,
holding the actual whatever the person is paying on.
right.
your collateral is usually property.
Most, yeah, and most
No.
definitely.
Yeah, and
Yeah.
it's a house. We don't do small loans. We really just do mortgages. So they hold the house as the collateral. Now, if you have a property, they could use the property towards that and put it in the amount of the
Right.
actual loan, but we don't do small loans.
Yeah. So if somebody has a property that is worth $70,000 and they want to come in and borrow $20,000 to go to Israel again, you won't do that.
Say that again, sorry.
If somebody has property that is valued at $70,000 and they come to you and say, I want to borrow $20,000 to take my family to Israel, you wouldn't do that.
No,
Oh,
it's only for homes. You only
Yeah.
could use the property for a home, and that's it.
That's it. Absolutely. I know that was the original intent decades ago when the mortgage corp was developed. That is still the intention, that it's only for home buyers or homeowners, those persons who want to have a home. And then you move into your house and you pay the mortgage. Mortgage corp will hold that as collateral until such time as you pay it off. Correct?
Sorry, so Leslie, sorry, Mr. Wilkerson, I mean to interject. So when they do it like,
Anytime.
when they do it like that, what if someone have a mortgage by a bank? Are you guys willing to take that over, or you guys don't do that like that?
no, so we don't
No.
transfer mortgages. Now, if you have a property with another bank and you want to construct on the property, then we can pay that property loan off that you have with the other bank. And then if whatever you're qualified for a construction loan, we'll give it to you based on that, which will be paying off the property loan and then whatever you have left for construction.
Right.
But
you
don't take over
mortgages.
No, we don't take over other person's mortgages.
Indeed.
Thank you so much. You guys just have a customer. Thank you so much.
Great.
Let me tell you guys something. Yes, we are talking about all kind of crazy credit stuff, conventional and unconventional, but we are also talking about other crazy credit stuff, which is credit information. Now, suppose I didn't stop on that investment. Now you have a customer coming as a result of our conversation, and that's the whole idea. Plus, a lot of us might also be a little more enlightened now about what really happens at the mortgage corporation, because there are a lot of people who really still don't know for some reason. Okay, so yeah, thank you very much for that clarity, Leslie. And like she
Thank
said,
you.
you have a customer. How about that? All right, and I'll take my 10% and for my bringing it up. Okay, way to go. Just kidding. All right, so that's how investment credits work, kind of like how the mortgage corporation works. What is the investment? They give you the mortgage for the building, and then you pay the loan back. Of course, they don't give it to you interest-free. The mortgage corporation has to make some money too to pay its bills, so they'll charge you interest just like other banks. But however, it's likely that the mortgage corp's bank rates are maybe lower than the market. Is that true? Or the same as the market?
I've been told that our interest is a bit high. Our interest is 6.25%.
That's a bit high, but not too high. The average rate nowadays is about between 4 and 5%. In some places,
Yeah, but we only require 5% down. So even though other banks their interest rate would be a bit lower. The
Right.
amount of money that they have to come up with is about at least 20%.
Maximum. Certainly,
Yeah.
certainly more than 5 and up to 20.
Yeah.
Yes, and
Not- not-
construction went up too.
Of course, there are all those other variables now. But
Mhm,
again,
supplies and
also,
everything.
also the mortgage corporation, yeah, because of the lower down payment, that allows a lot of people to become homeowners sooner. And so they are charging a slight premium above market, which is 6%, which is not too bad above, because the average market is somewhere around 4.5% anyway. And they're not offering you some of the premiums. And while the mortgage corporation, on the other hand, if you become delinquent, they'll work with you longer than I'm sure, perhaps, than maybe a typical financial lending institution.
And
Okay?
also, do you guys, Mr. Wilkinson, I remember this class also taught me to be a better borrower.
Uh-huh.
Leslie, do you guys can you make immediate principal payments, or there's a certain period of time before you can make principal payments?
I think you can make, yeah,
You can make it once your account is current, you can make it. But if you have an arrest, you can't make principal payment.
Yeah. If you have an arrest, you can make it, but they're gonna put it to the what? The arrest.
Arrest.
Of
Okay.
course. They're not gonna say you in arrest, but I know I'm behind, but please put this on my principal. Hell no. No lender will do that. Who is worth anything. If you're in arrest, anything you pay will go to the arrest first. If you're in arrest and have money somewhere else in the institution, they find it, they'll put it on the arrest potentially. That's how it works. Okay. But yeah, that's a nice thing to know. Can you pay on principal? Is there a penalty if you pay on principal? And
No, not that I know of.
yeah,
No
no
penalty.
penalty. Yeah, typically that is the case for most lenders, but in some cases, depending on where you are in the world, some institutions, they charge a penalty if you try to reduce your principal. They won't stop you from doing it, but they might try to penalize you. Just like if you have a fixed deposit for 3 years and you break it before 3 years, and they say, oh, great, we're going to charge you 3% interest for breaking it, and that sort of thing. Okay, but in most cases, you can pay against your principal without penalty. Most institutions are doing that now, okay, for sure. So if anybody tries to penalize them, they might lose the mortgage, for sure. All right, buying credit, on the other hand, is what we call short-term credit, probably an overdraft facility for business houses primarily, those who need temporary money for supplies and inventory. Let's say, for example, Christmas is coming up. We just came out of a pandemic. There are cash shortages. Some of the retail companies might say to their bank, I know the money to buy the Christmas supplies I have, but Christmas is coming, and we expect Bahamians to go nuts as usual, as the whole world will go nuts, no doubt, this Christmas, because this is our first sort of free Christmas since the pandemic. And so I need an overdraft facility for $100,000 to buy my supplies. Once I sell them, I put the money back in the bank, pay off the overdraft, and we're all happy. Okay, that's typically how buying credit works for usually retail types of businesses. And then finally, of course, is the merchandise to commercial credit that we're going to be talking about to a great deal, which is like company to company credit. And so you're going to see credit from a completely different perspective this semester than you saw last semester. But hey, what's the sense of doing credit if you only have 50% of it? The only thing that makes sense is to see the big picture, which is what we'll be doing. All right, keep going, Danielle.
Buying credit versus merchandise credit. Buying and merchandise credit have much in common and serve the same basic purpose to profitability increase the volume of business transacted by the borrower. The two types can, to a large degree, substitute for one another. The proceeds of a bank loan are often used to buy merchandise, while merchandise credit can sometimes be obtained in such ample quantity that no further financial aid is needed. Both banks and merchandise suppliers grant credit on a short-term basis, The granting of both types of credit is governed by the same basic standards, and the procedures of merchandise credit covered in this course have the same applicability in bank credit. Essentially, the same facts and the same sources of information are used.
Interesting.
Indeed,
Notice, so now even though we have this fine credit, which we are familiar with, and we're going to be looking at merchandise credit, which we may not be familiar with, notice we're being told right up front that both of them involve the granting of credit on a short-term basis. Both of them governed by the same basic standards and principles of lending, which you'll see, and the procedures of credit. And so despite their differences, as far as credit is concerned, they have some very similar positions, as you will see very soon. Okay, one
Excuse
more.
me, Mr. Wilkinson,
Mhm.
are you able to do a shared screen? I only could see chapter 1 and then types of credit, the first paragraph in types of credit.
Okay, let me see. Shared screen. Shared screen. Let's see if this works. I hope this is the right screen. Can you see it?
Yes,
Okay, so I'm great.
thank you.
All right. So keep going, Danielle. You started this. One more page. Page 3.
hold on, sorry. Indeed, those who make the credit decision for banks and merchandise houses have frequently been employed in both fields during their business careers. While there are similarities in merchandise credit and bank credit, there are also differences. The principal and most obvious one is that in bank credit, money flows back and forth between debtor and creditor, while in merchandise credit, goods or services travel in one direction, while money alone makes the return trip. Oversimplified, a bank sells money, a merchandise creditor sells goods, with both sales being settled by the payment of money at the end of the credit term.
Again,
The other
Danielle.
variations
Sorry,
between bank and
Sorry, Danielle. So you see in that paragraph again, what are they trying to do? Before you get all flustered, like, oh, that's not the type of credit I'm used to. They're showing you right away, except for the goods and services that are moving back and forth between parties. The principles of credit for merchandising and services credit are the same as for financial lending that we are used to. Okay. And at the end of the day, the common denominator is what? The money. See? The money. In one case, yeah, we're exchanging money that we expect to be repaid. In the other case, we're exchanging goods and services. And at the end of the day, the merchandisers and others expect to be paid as well. So don't let the nature of the business cause you to lose sight of the fact that credit is fully at play and that the principles of credit equally apply to all categories of credit. Okay? That's the beauty of this thing. All right, keep going.
The other variations between bank and merchandise credit are differences of degree. Bank loans are usually larger, of longer duration, more conservatively made. Debtors may often owe their bank much larger amounts than they owe any one firm among their merchandise creditors. In most instances, bank credit is granted for a longer period of time than is merchandise credit. Bank loans are often made for 3-month periods, while the time granted by the merchandise seller is usually between 10 and 60 days, depending on the industry involved. Bank credit is more conservative in that the bank is more selective in choosing the borrower. It is also more likely to require special protections. There are excellent reasons for this more conservative attitude, chiefly that a bank by its very nature must exercise more prudence. It has a responsibility to the community as a caretaker of depositors' funds. Its credit granting powers are governed by state and federal laws, and its loans are reviewed by government examiners. The only supervision of and restraints on merchandise creditors are
self-imposed. Thank you very much, Danielle. So again, as you can see, some of this stuff is US based. And the reason why I didn't change anything is because I want you to see that even though it may not be specifically from our domestic market, that the concepts are the same in most developed countries, but at least in the Western world. God knows what they're doing in China, India, and doggone Africa and Middle East and all that stuff. That's a whole different ball game when it comes to credit. Okay. In fact, you don't even hear the discussion coming up. When we hear about credit, we're thinking about the Western world, the UK, Canada, the United States, the Caribbean, South America, okay? Which is a whole different ball game in terms of what goes on with credit in the Eastern world on the other side of the fence. That might be interesting. Do they do the same principles as we do or not? All right, but that's a whole other issue. Okay? We deal primarily with the type of credit that we see in the UK and the type of credits that we see in the United States. And so therefore, the majority or all of our credit activities based on one or the other type or some interesting combination of the two. Okay. So when we see that certain types of credits are governed and supervised by law, we don't have credits per se that are supervised by law, but we do have, say, in the case of the mortgage corporation, since they are what? Government backed, are they not? The mortgage corp loans, are they government guaranteed? Anyone?
Yes, some more.
Yeah, and so because they're government guaranteed, that means that government might put its hands in it from time to time to see what's going on, hear what's going on, want to know what's going on, want reports on what's going on, and may any number of things because they are government guaranteed. And so they are interested in how those loans are performing and the type of loans that are being granted. Okay, interesting. All right, so that's one of the other unique things about the Mortgage Corporation of Bahamas compared to other lenders, because other lenders are not backed by government guarantee. And so the government cannot put its hands in it, but certainly the Mortgage Corp is backed by government guarantee, and the government says, if we're guaranteeing this stuff, we need to know stuff. It's really quite that simple, and there's nothing wrong with that. It's like when you invest money in a company, okay? You expect to get information on what's going on with that company. You expect to get answers to any questions you ask. And if you don't get those things as a simple investor, you're going to get a little concerned. Okay? It's the same principle. All right. So then the credit function, how did all this stuff happen? A lot of times we just enter credit, we don't know where it came from, how it happened, it's nice to know. And so I thought I'd throw a little bit of that in there. Leslie, are you there?
I'm here.
Okay, why don't you pick up the next 3 pages for us? Beginning
Okay.
with growth of the credit function.
Okay. Growth of the credit function. The relative lack of government regulation over commercial credit is unique. For with the increasing complexity of our industrial society, the federal government has greatly expanded its influence on many areas of American business. There is probably no other major segment of business relations that has been as free of government influence as has the field of merchandise credit. Investment, bank, and consumer credit have all been subject to various regulations by government agencies, but the credit one company extends to another is supervised only by the management of those extending the credit. Only the judgment of a company's credit management decides that amount of credit will be granted and for what period of time. It sets its own conditions and makes its own decisions.
I'll stick a pin for a second, Leslie. Notice again, this company, the company credit, is unique again in that, unlike other financial institutions, banks, insurance companies, mortgage companies like the Mortgage Corp, and so on, government impacts them. Even the Bahamas government, whether it's from a back perspective or trying to influence interest rates to the Central Bank of the Bahamas, or whatever direct or indirect government involvement there is.
Stamp
there's-
tax.
Yes, stamp tax, absolutely. If the government says a stamp tax for this, that, and the other function, every lender, financial institution is obligated by law to collect that stamp tax. And if you don't want to collect it, too bad. You still have to what? Pay it. And so you may as well collect it. All right. And you have no choice in the matter. It's like value added tax. Stamp tax is the same. It's an agency duty, it's a government involvement, and these financial institutions in the Bahamas are working for the government in collecting those taxes and paying them into the treasury. Absolutely. This
They
is
also
what
made, they also, sorry, Mr. Wilkinson, they also made amendments too, that stamp tax can only be charged on collaterals and not actual loans.
yeah,
Mhm.
on collateral as opposed to the loans themselves, some kind of concession. So you can see the government can vary even what its requirements are in the middle of anything, because that's what governments do. Okay. What is interesting is, even though government has this profound effect on all these different kinds of financial institutions, when it comes to company credit, the government is hardly involved or even interested, seemingly, except for maybe the VAT that they collect in the company, but they don't get involved in company to company credit for some interesting reason. Those guys are out there giving each other credit or not giving each other credit based on their own program, just like a little mafia thing going on, even though it's not mafia related. Okay. And this is what makes this kind of credit very unique. All right, keep going, Leslie.
Our economy has been served well by the unrestricted exercise of this credit judgment. Credit management has kept pace with economic growth, successfully supplying the increasing amounts of credit through which almost all goods and services purchased by American business firms are acquired.
Including Bahamian business firms, because we do a lot of stuff here on credit as well between each other and even internationally. I hope you know that. So a lot of these companies, when you see them stocked out, they didn't pay credit for all of that cash for that upfront. Did you know that? A lot of that stock that we go to buy across the Bahamas, a lot of that is based on the same credit that we're talking about. They bought it on credit from some company here who has a warehouse with stuff in it, who bought it from some company in the United States on credit, and everybody's promising to pay the other one when what? They sell the goods. You follow? So we are directly impacted by this unique form of credit. Just that we live in our own world of traditional credit, we just are not aware of this major type of credit that keeps the economy afloat as well. Because if these companies in the Bahamas were not able to get stuff on credit from local companies who get it on credit from international companies, imagine when we go into the store for certain products, they will not be there. And until we understand it in that context, it's easy to take it for granted. Because there's some people who actually believe that these retail stores that have stuff piled up, that they pay cash for everything.
That's what I thought.
I know, I'm not surprised. A lot of people believe that. But the truth of the matter is, hell no. In fact, in most cases, hardly likely. And where they do pay cash, it'll probably be a portion in cash. But the rest of it on credit until those goods are sold, and then the retailers or whomever they got credit from, whether it's here or abroad, are then paid by money order or whatever method they agree. See? So this kind of credit is a very unique animal that sleeps quietly by all the other kinds of credits that we do, unassuming out there, doing major stuff, creating major benefits for economies in the Bahamas, for the economy of the Bahamas, and people are not even, in many cases, aware of it. Not only are they not aware, but they have no idea how it works. So you guys are now, as traditional lenders, you are going to be in a unique situation where you're going to see company-to-company credit at work, similar to the traditional lending that you do, and in many cases, quite different. Okay? All right. Keep going.
Okay. History. It has been a long road to this state of vigor and vitality. Merchandise credit traces its roots to the beginning of business transactions between human beings and has evolved greatly over the years. We are familiar with the literature of earlier centuries, which showed that people were once jailed or sold into slavery for the non-payment of debts. Happily, merchandise credit has since become a highly refined, more sophisticated mechanism. In this country, from colonial times to the Civil War, normal credit terms ranged from 6 to 12 months. The Civil War, okay, hold on. The Civil War and its aftermath, developments in banking, transportation, and communication created a set of conditions which strongly influenced the development of modern trade credit. Credit terms today are much shorter than a century ago. But this does not mean that there has been any shrinkage in the amount of merchandise or trade credit in use. The amount of merchandise credit used in any recent year is many times the size of the merchandise credit employed 25, 75, or 100 years ago. There are many reasons for this development.
Keep going.
Okay, I need
So
to
you're
listen
reading from
to
my screen?
Yeah.
Okay. Number one.
Number one, more people. We have had a rapidly expanding population with more consumers requiring more goods and services. Technological developments. At any time in the last 50 years, one could say that the past 2 or 3 generations have witnessed more technological advances than had been made in all previous recorded times. More kinds of goods to fill human needs and desires are being made faster, better, and at prices that make them available to greater numbers of people. New inventions and processes create new needs and luxuries. The tremendous technological developments have given rise to new industries, new businesses, and new greater opportunities for employment.
Mm-hmm.
The changing role of government and increased government spending for services that did not exist 50 years ago have increased money in circulation. And there have been other federal efforts to maintain business activity at peak levels. Sociological and political change. The structure of our society has changed materially in the last century. The base of our society has been broadened. What social scientists call the middle income sector has widened significantly. More of us want and can afford more. Growth of the capital markets. New industries and new companies have found more sources of ownership, capital, and of investment credit. The increased savings of the public, the intelligent administration of these funds by their depositories, and the increasing acceptance by the public of the capital stock of corporations have all helped finance the growth of business. Improve merchandise credit techniques. Special skills in the granting of credit have been developed, and a true profession of credit people has developed to exercise these skills. It has thus been possible to grant more credit to more firms and in larger amounts. It has been possible to extend merchandise credit to concerns that would not have been considered eligible in earlier periods. The sharp upward push in living standards created by advances in industrial technology has received substantial help from the greater use of merchandise credit. Merchandise credit is now the principal source of temporary operating funds for most American business enterprises.
Thank you very much, Leslie. And so now you see, and again, wherever you see American, you can easily just type over that and put hanging, because we are known, they say, to be copycats, but we don't copy all the bad things. We copy some good things as well. And credit practices happens to be one of the good things that we copied from the Americans, and one of the gifts that British forefathers left with us in what we call civil society. It's just that nowadays, those of us who are kind of young in this just became young Bahamians in the modern Bahamas. We don't have too much knowledge about how all this stuff evolved, nor do we generally care. We just know that we're in the middle of that doggone property loan. We want the down payment. We want the loan payment. We want the customer to understand that they expected to make payment, and so on. Okay, but again, this here is just designed to take you back in time for a moment, so that you can see from whence credit came. Okay, it's interesting. I have a photograph of my grandparents on my mom's side that I was able to salvage a long time ago and kept for many decades. And now when I look at the picture decades later, it's fascinating, just to reminisce on from whence things come from. And credit is kind of like that for those of us who care at all. It didn't just happen. In and around the world, in some cases, it never existed at all. If you didn't have money, cash, dog eat your lunch. You only can get what you can afford to buy. For a long time back in time, in the world's history, that is how it works. Cash and go. But hey, cash and go. Do we have one of those over here? Cash and go. That's how it works. If you didn't have cash, too bad. Go and get some, because nobody is going to give you credit. Because nobody's going to trust anybody with their goods, but I'll be back next week. Okay? No way. So this thing about credit evolved over time as more people and more technology and more government and more social advancement came into play. All these things impacted the credit world, and then suddenly even persons in low income brackets can actually go and borrow money. And interestingly enough, some of them pay them loans back way better than persons who are in the high income bracket. Sometimes, true or false, lenders. Is that true? Persons
Yes,
in the
Mr.
low
Russell.
income tend to pay better sometimes. The point I'm making is, because a customer makes much more money doesn't guarantee that they will pay their loan on schedule. A lot of people make more than enough to pay their loans, but they refuse to pay it for other reasons.
That's
I
why, Mr. Wilkinson, it is so good to secure a salary deduction.
If you can, absolutely. The only problem is only half the country. When I say half, I'm just saying that for the sake of it, because I don't think it's 50-50, but that there's only a part of the country that you can get a salary assignment from, or even a payment assignment. And if you can, that's always a good idea. But then there's the rest of the country that does not have that facility and will not arrange for that to happen as far as their accounting and business processes are concerned. Their view is, if you're going to give our people a loan, you have to trust them to repay the loan. All right. But certainly, where you can get that salary assignment or that payment assignment is never a bad idea, for sure. All right. So who's next on my list? Thank you very much, Leslie. Atalia, are you still there?
Yes.
Are you there? Perfect, perfect. All right, let me find. Do you have your reading sheets with you?
Yeah, I have one.
Okay, so so then you can pick up 1.6 for us. Uh-oh, you have some weird stuff coming up at the bottom, but that's okay. Don't let it spook you. Just let it rip, Atalia. The commercial credit account.
The commercial credit account. The account the business concern maintains with the supplier is much like the personal charge account of the consumer. In either case, when the sale is made, does the seller ask the buyer for a written promise to pay the purchase price? There may be a written order form. There will be an invoice, shipping papers, and our sale receipts, but no IOU is signed. If the credit standing of the buyer is satisfactory in relation to the value of the purchase being made, the goods are delivered without further ado. Then a notation is made in the business records or books of the seller that a sale at a certain price was made to this customer.
Stick a pin, Natalia. Isn't that crazy? That's how business to business credit works. Very different from credit as you know it. They just determine whether the person is a satisfactory buyer. No formal 3-page, 5-page loan documents, mortgage, first demand legal money, none of that stuff. They just decide based on their credit checks. They have a little way of checking to see if a certain buyer is satisfactory, and if they don't have any negative news on that person or any reason to believe, then they ship the goods. How about that? And send an
I,
invoice with it. Question?
yeah, so like a place like Super Value, you think they will actually pay cash, or you think they will be under this like credit, this commercial credit account? Like,
No doubt on the commercial credit, because they buy huge amounts of stuff all the time. And while they may have a good amount of cash sitting in there that they can use to pay, sometimes maybe all of it or significant portions of it, a lot of times companies don't want to deplete their cash flow. Do you follow? So they want to leave,
yes, sir.
leave the money on the account. And if they can get credit, they get credit. And when they've sold a certain amount of merchandise, they then make the payment as agreed. So let's say Super Value decides to buy $1 million worth of goods from somewhere, locally or abroad. And then the agreement is you will pay us in 45 days. So when the goods, they ship the goods, because by all stretch of the imagination, Super Value's been around since King Hammer was a hatchet. They know Super Value. They've had a good credit with Super Value. And so they don't even question it may be Super Value anymore. Just ship it. And if the arrangement is to pay in 45 days, 30 days, 60 days, or whatever it is, and if Super Value lives up to its reputation, they just send the money. And
They basically go off of viability of a company.
Viability and trust, yes. Okay. Now, when we talk about viability, that's a good word, because companies are not just going to send merchandise to any old company, any old place. Do you follow? For example, if a company in Russia makes an order, depending on where in Russia that's going, they may not want to give credit, because there's certain things about Russia that people believe are spooky, as it is with other countries. So again, the location, the type of country, what's going on in the country, all these things might determine whether a merchandising creditor is going to ship goods to hell there. And sometimes if they're going to ship goods there, they might say to their corresponding bank in that country, okay, we are going to give credit to this company in Russia, China, Africa, or the Middle East or whatever, but we want you to give us a guarantee that we'll be paid. See my point? So somewhere in the middle of all that, a letter of credit is established such that the creditor company that is sending merchandise can try to protect its payment. Okay? So yeah, viability is the word. Is it a viable thing to do? And viability, as you probably are beginning to put together on this trade credit type thing, is a function of all kinds of variables. Okay? Just like when somebody comes in for a mortgage at a bank or mortgage company, you ask yourself, is this a viable project? Is this person are these persons working? If they've been working, how long? Are they single or married? Why are they buying the house if they're not married yet? Is it a good idea to sell a house to give a mortgage to people in the house who are still single? All these things we ask ourselves to determine viability as well. So that's a good word, by all means. All right. But the key, the outside of all the headache stuff, the cool part about all this is these company to company deals, they just kind of make them, especially once they establish a trust issue element. Man, you just send your order in and they ship. Send your order in and they ship, just like Amazon. But in Amazon, it's a little different, don't you? You have to pay first. Does Amazon give credit?
No.
No,
Not, nope.
no. All right. Now, Amazon might get credit, right? All those products that they ship out, they may not pay cash for all of them. They may have somebody sending those goods uh, on trade credit, see? Because so if they put an order for $1 billion worth of goods somewhere, people say, man, hurry up and ship it. That's Amazon. We know they're going to pay. They always pay in 30 days. They always pay in 60 days. We know them. Okay. So even though Amazon will not give us, the consumer, credit, they can get credit if they need it from other companies around the world, including the United States. And why is it a good idea that they don't give consumers credit? Because they can't afford for a bunch of people to be defaulting on every little thing they give for credit. All right? You pay first, then you get your goods. And then that money you used to pay, they use some of it to pay their trade creditors. Does everybody see that? Just like other lending practices. If you give somebody a mortgage and they're working, they'll pay their mortgage hopefully, especially if you have a payment and salary assignment. If they lose their job, though, now you have a problem. There's no job and there's no payment assignment anymore or salary assignment. Okay? So the same kinds of risks exist, just in a different way. All right, keep going. I tell you.
All right. In merchandise credit, this transaction is called an open account. The seller makes a note entry of the amount of the sale on a separate page, ledger card, or in computer storage for each customer account. The amounts due from customers as a result of purchase are called, logically enough, accounts receivable. The buying firm makes a similar notation in its books. There, the notation is an accounts payable.
Okay, now let's stop there for a moment because this is interesting. For those of you who are traditional lenders in this room, you might think that you don't have any receivables or payables on your books. But you certainly, for sure, have receivables on your books because every loan mortgage that you give is a loan mortgage receivable, meaning what? That you expect that the persons you gave the loans to, that they will pay you as agreed. Until they pay you, it's a receivable. You hope a receivable is simply what? An amount you hope to get. So when you give a loan every month, you hope to get what? The loan payment. All right. And so each month, as you get a loan payment, your receivable goes down. If it's a 5-year loan, you do that for 60 months, and then your loan goes down to zero. If you have a receivable and the customer is not paying, your receivable doesn't move. You have to then send your delinquency department out to find them and see if you can get them to make payment. If they're successful in finding them because they haven't left town or some nonsense like that, then you might be able to get them to start what? Reducing the receivable. So just as it is in the trade business, company to company, it is in your business. You do have a receivable as well. And on the other side, this payable by the buyer is equivalent to the payable by the borrower. A lot of borrowers don't seem to realize that when they borrow money that they have a liability. And a liability is a payable. Okay? And you will have that liability as a borrower until you pay off the loan in full. Okay? A lot of people are not familiar with the word payable, but it's really a liability or an amount that you owe. And that's the other thing. Some of this language, you can't use it every customer because they don't know what you mean. So if you're calling them in and said, Mr. Jones, you realize you're hurting the bank's receivables? Like, excuse me, what's receivable? See my point? And as a borrower, you expect to keep your payables in order and make your payments. Excuse me, what's a payable? They don't really care about that stuff. So when you're talking to certain customers, you will probably have to change your language a little bit so they can understand what you mean. But the key thing here is that even with merchandising or trade credit, we have this similar type of situation, even though it's informal. It's not as structured as other lenders. But on the one hand, you still have the receivable or the money you expect to get from your trade-based clients, and of course the buyer in this case, which is equivalent to the borrower. See, you can always be making these equivalences straight through, no doubt, this whole session, because that's really the idea, to let you know that yes, we're dealing with trade creditors and borrowers and buyers, but their responsibilities are the same as other lenders and borrowers, and the techniques used are oftentimes very similar. Okay? So if we take a moment to look at the ledger, the accounts receivable ledger, and again, this language is an accounting language, but it's language that bankers use as well. Okay, we may not say accounts receivable, but we'll say what? Loan receivable. So when you go to work tomorrow, you say, excuse me, what are our total loan receivables? It's, what the hell, we shouldn't have paid for to go there. Because now you can start even using a different language because you're learning different things along the way to kind of augment what you actually do from day to day. Okay? So this is an accounts receivable ledger. Whose account do you think this is? The seller or the buyer? Based on what you've read so far. Whose ledger is this? The seller's ledger or the buyer's ledger? Anyone? Make a guess.
This looks like
The buyer.
Okay, why would you say buyer?
the debit purchase would have been what they borrowed, and then the credit purchase would have been what they paid back in January and February, and then they borrowed again in March. So that's their debit purchase. I don't know.
No, you're getting warm. As a matter of fact,
Okay,
as a
can
matter
I
of fact,
try?
yeah, you start analyzing it, and I was hoping you'd do that. Go ahead, give it a shot.
Okay, so basically what she said, I see in January here, the debit is what they started.
Now,
What
when
they
you say
started.
they, who are they?
Basically the buyers.
Okay,
And then in February, they would have paid that off with a balance of 0.
okay, cool. Now we're getting warm. So yeah, the buyer makes an order on
Mhm.
January the 3rd for how much?
You say for January the 3rd of $5,436.20.
Exactly. And so those purchases are debited to the account. And then on February the 2nd, what happened?
They paid that off, the full amount, which left them with a balance of 0.
Absolutely. So now, as at February the 2nd, the receivable or the money owing to the seller, because this is a seller's account, is equal to,
Pat, can you repeat that?
as at the end of February, after the payment made, the seller's receivable account is showing a balance of
0.
0. Is the seller happy?
Yes.
Yes,
Why?
'cause
Why?
they
They
paid
no
their
longer,
bill.
yeah, they no
Yeah.
longer have a bill.
Yeah, the buyer paid it in full.
Mhm.
So you can see then on the seller's receivable ledger, whenever a sale is made, the seller does what? Debit purchases to show that goods were sold on credit. And then when payments come in, they show it as a credit.
Credit.
Okay? And one
I
off.
always confused with debit and credits.
Yeah, I know. And these particular debits and credits doesn't help. Okay? For the moment, you just have to accept it as the way they do it. Okay?
But when they say debit is anything that's coming in and credit is anything that's going out.
That's
that correct?
typically what happens. Now, in this case, based on that
It's
rule,
different,
is
yeah.
anything coming in?
Yeah, the money is coming back in.
No, not, well, let's not go to the money yet. On January 3rd, we have a debit to purchases of that amount. Is that
It's
anything
going
coming-
out, it's going out first and then it's coming back in.
Okay, so in this case, then, whenever the seller makes a credit sale, then we debit the purchases account for whatever the amount is, and then
Mhm.
once the buyer makes a payment, then we do what? We credit that account.
Credit.
Now,
So basically we're given the loan or trust, and then on a later date they can pay back the amount.
absolutely. Now, if you're wondering why we're debiting purchases, it's only because when these goods are sold on credit, we have established a receivable, haven't we?
Yes.
Okay, remember, whenever you sell goods on credit, you're not getting any money yet. So in accounting, since you're not getting cash to debit, we have to debit the next best thing, which is accounts receivable.
Mm.
Okay, for those of you who may have done an accounting class, that makes perfect sense now. And for those of you who haven't done an accounting class, unfortunately, you have to take our word for it. That anytime the seller makes a sale on credit, he debits purchases, which is his receivable account, saying that the buyer owes me that amount of money. And then when the buyer makes the payment, he will then credit the receivable account and bring the obligation to zero. Does everybody see the zero?
Yes.
Yes. Now, that's in February. Did this seller make any further sales on credit?
They made any further sales in February?
No, not if we're done with February. After February, did this seller make any other sales on credit after February?
No.
You sure?
No.
March, is it March 5th?
Yeah. What happened on
March
March?
8,764.
Yeah, the seller gave more credit in the amount of 8,764 and 10 cents.
Right,
Does everybody see that?
yeah.
So
Yes, sir.
we debit purchases again because that is the receivable that you expect to get back sometime in the future. Now, my question is, was this 8,764 ever repaid?
Yes.
Yes, half and half.
April 4th and May 4th.
Yeah, half of it was paid on
It
April the
wasn't
4th.
paid in full.
My power was off for a while.
It wasn't paid in full. No, 50% was paid when?
That would have been
And
April 5th,
April
April
4th.
4th, April 4th,
Yeah, and then the other 50%?
May
May
4th.
4th.
Absolutely. And now the buyer owes the seller how much?
Zero.
Zero. And so this is, and notice, once you get the structure right, you do the same thing over and over until thy kingdom come. Does everybody see that?
Yes, sir.
Yeah, make a sale, get the payment. Make a sale, get the payment. Worst thing that can happen, they pay it back in several installments instead of in full, or God forbid, they don't pay it back at all. If they don't pay it back at all, you have a collections problem. You follow? But the structure in terms of selling on credit is always this. So again, this kind of stuff may seem complex until you actually go through the way we did. And then all of a sudden, man, that's it? When I first looked at that, I wondered if I should even read that. And that happens a lot. Don't let that stuff throw you off. It's not as complex as it seems, especially if you have somebody who can explain it initially and then you're like, really now? Piece of cake. Okay, Atalia, keep going.
So Mr. Wilkinson,
Hi.
all right, when they say like seller S4, that's just for the number code says use a just a curiosity.
Where did you see that?
Like how they have refs, they have seller and the credit and letting you know the transactions between the two parties.
Absolutely. Okay,
I
absolutely.
mean the numbers next to them.
You mean the number 4?
They like invoice numbers or
Could they,
something.
yeah, they could be. those reference numbers, it appears that the S is for sales, and yes, the 4 could be an invoice number or the number of shipments or whatever. But once you're in the business, you'll know for sure what the 4 means.
Okay.
For sure. Good observation. And then the CR obviously stands for credit.
Credit.
That's
Credit.
that's the short version for credit for anybody who's done any accounting. All right. And so that credit 5 obviously refers to money coming in, and the 5 is a reference to something that will be known to whoever's dealing with this particular ledger account. Absolutely. Okay. So this point of this reference section is just so that if you have any queries or issues, you can look at the reference and go right to the file and find what you're looking for. You follow?
Looking at it, I would think credit 5 mean they paid in full. And then when you look at credit 11, meaning that they pay some, and then credit 15, meaning that they pay the difference. That's how I look at it. I could be wrong.
No, you could be right as well. Absolutely. Okay. And so either one of those positions could be correct in terms of this particular business. Okay. Because remember, the references for every company will be different. But what is important is that you do have a reference so that if something comes up, you can go to the ledger, look at the reference number, go to the file, pull the file, and deal with whatever problems you have. Because sometimes buyers have queries, people are raising questions about something, and you may need to use your reference to get you to the source of information in the files quicker, okay, by having it there. All right, okay, great. That's a keen sense of observation. I was wondering if anybody was going to go to that stinky line called reference, because a lot of us don't even want to deal with REF when we see it, but it's a very important column in the ledger. And again, this is from the what? The seller side. The buyer side will be exactly like this, except opposite. Does that make sense?
Yeah.
So where the seller is debiting purchases, what is the buyer doing?
Credit.
Crediting purchases. And where the seller is crediting payments, what's the buyer doing?
Debiting.
So it's just the other side of the fence for the buyer. Okay, that's it. And then the buyer would have his own reference numbers, but again, depending on the situation, the date should be the same, the reference number should be the same on the buyer and seller side, so they have almost identical information. The only differences they should have is where the debits and credits are placed. Everything else should be basically the same on the seller side and the same on the buyer side for sure. All right, keep going, Natalia.
The procedures illustrated above is used in all American merchandise credit transactions. True, the record keeping becomes more elaborate as firms grow in size. We then move from written ledgers to computers, technicians, and electronic data processing. But the basic principle remains the same, and both buyer and seller separately make note of the transactions in their records, whether these are represented by an ink stained book, trays of ledger cards, or magnetic tapes.
Or even very superior digital computer software. Remember, no matter how fast the computer might be working because of new technology, and no matter how consistent the computer might be, as far as being able to think independently and solve problems and sort things out, they're as dumb as 17,000 bats. Okay? People are still required, despite how handy computers are, to make decisions and to analyze information based on what's going on. Okay?
Yep. The
All right.
information.
Question?
No
Okay.
question.
Great. Italia, one more page for us. Then we'll move to Ellen.
The information for these notations is taken from the invoice the seller sends the buyer when delivery is made. This invoice describes the goods sold by number, size, quantity, etc. It also shows the price per unit, total price of the shipment, and the amount of time, selling term granted the buyer before payment is to be made. Promissory notes and trade acceptance. Can the seller make the debt created by the sale of merchandise more positive, more definite, preferably preferably some document in which purchasers would acknowledge in writing that they owed the seller a specific sum. Yes, the means or instruments do exist, but their use is rather limited.
So
And
now we have the question, do we actually have some kind of documentation involved in the trade credit process? We're saying like in other lending situations, and we're saying, yeah, but we don't use that too much, only if we have to. Okay. And so I guess we're going to get to a situation where we might see where there are some cases where we actually have documents involved for signing.
Yes, sir. And in this case too, sometimes the promissory notes would then tell you how much you owe the person, the company you're borrowing from. And if you were to pay off early, there will be a prepay penalty as well, or not.
Absolutely. And so now whenever documentation kicks in this business, it starts looking like the normal stuff that we used to in other credit transactions because it has certain provisions and stipulations like other kinds of promissory notes in the lending process. So now, despite all the differences that we may spot along the way, we're beginning and we'll see much more so that the similarities are going to kick in as well. All right, keep going.
in domestic commercial credit, there are two credit instruments: direct evidences of debt that are goods occasionally, that are used occasionally, the promissory note and the trade acceptance.
Okay.
Number one, the promissory note is a credit instrument in which the buyer promises to pay the seller a definite sum of money, either on demand or at a definite time in the future. Promissory notes are the normal means of making bank loans.
Absolutely. That's what we call signing our lives away. Anybody heard that expression? I'm signing my life away because we're signing that bloody promissory note. That's I, Samuel Wilkinson, promised to pay the Bahamas Mortgage Corp $300,000 in doggone 120 installments over the next 20 years or whatever it is at the interest rate of X and the amount of Y. And then I sign my big time promissory note. And they lovingly give me a copy or the original, and then I'm off to pay for a mortgage until I die or something. Hopefully, some people get to pay it off. Some people, yeah. Did you guys know that the word mortgage came from a Latin word which means mortem, which means death? Did you know that?
No, not at all.
First time hearing that.
Yeah, which is why we say that when we're signing mortgages, we're signing our death warrant because mortgages are around for so long that by the time we finish paying, we're already dead or close to death's door or some such thing. Or we just drop dead before paying it because it's so bloody long, so to speak. Okay. And so when people ask me about does it make sense to do it, I said, of course, there are the benefits of having a mortgage. And of course, you don't have to pay it off. You could just keep paying and enjoy the home. And if you die, then let somebody else worry about it. Who would that somebody else be?
Yeah, insurance to pay it off.
If you have insurance, but you know, crap happens and you turn 70, you're like, man, I'm not paying anybody. So and if you die, who will pay it off? If it's not insurance, somebody else, your heirs.
Benefit, yeah.
Yeah, they either pay it off or get out because the bank is going to what? Run them out. Okay, so you don't have to like worry about, oh Jesus, I don't pay this mortgage off. No, sometimes you should leave a mortgage for those people behind so they can appreciate the sweat that you went through. You pay it off, they're not gonna appreciate it. They're gonna have a ball in there because they don't know what it's like. But you leave some and they have to pay, is oh my God. I see what my parents were talking about. Kind of thing. All right, keep going.
The use of promissory notes by merchandise creditors is rare, particularly at the inception of the credit transaction. More frequently, they are used to close out a past due account. Number two, the trade acceptance is a draft drawn by the seller against the buyer for payment of a specific amount at a definite time and place. This becomes an effective credit instrument only when the buyer indicates willingness to pay by signing the face of the instrument. This signifies acceptance. The buyer also fills in the name and address of the bank. The acceptance then becomes a written acknowledgement of the sale and a promise to pay at a definite time and place. At due date, the seller deposits the trade acceptance within the bank for collection. Use of the trade acceptance is limited to a few industries and most often to accommodate a customer whose credit rating is satisfactory but whose operation requires more time than is provided by normal credit terms.
In other words, yes. Thank you very much, Natalia. So yeah, what we're trying to show you again are the similarities between normal bank credit as we know it and trade credit between companies. And so we all know the promissory note. If you haven't signed a promissory note, you probably will sign one before you die for something. For a car loan, vacation loan, school loan, mortgage loan, property loan. You sign a promissory note for something. That's the traditional loan. And those rare cases where companies actually prepare documentation, we are told it's not common, but sometimes it happens between large industry because of the amount of money involved, like gazillions of dollars, and they don't really want to take any risk, or depending on where the company is located in a high-risk country, we might do that stuff and then operate between banks for safety purposes, or in some cases for a company who might have credit from their bank, but it's not enough. And so they come to you as a company and say, you know, my bank is only giving me an overdraft for $50,000, but I need $70,000 worth of goods. Will you give me credit for the other 20,000? And since the seller may not be familiar with that customer and they already have existing obligations, says it's fine, we'll consider it, but you have to sign a trade acceptance, which I will deliver to your bank on the agreed date, and your bank will be expected to pay me. Okay, and basically that's how the trade acceptance works. The only reason why it exists because that's that uncommon arrangement between between companies that sell goods to each other. Okay, so for example, if a company is buying, let's say, heavy duty equipment of some kind that each one costs millions of dollars, they may not want to have the usual invoice arrangement. That might be a little too risky. They might certainly, of course, then want to have a trade acceptance where principals actually put their signature on a document just in case something goes wrong. And of course, that makes a world of sense. All right, any questions before we go on? Okay, so hopefully now you're getting that appreciation for that other kind of credit outside of your normal credit world. And this is always a good idea because guess what? You never know when you need this information. Even in your normal credit world, you may end up in an arrangement where you have a customer who came for a mortgage loan, but they're self-employed because they have a business. And then all of a sudden their business starts having problem and they start saying, man, I have too many trade acceptances that I'm responsible for. I can't pay them back. I see, and then I said, wait a minute, trade acceptance? Did I do that in that class? Kiss my foot. I never thought I'd need this at Mortgage Corp. Suddenly you have a self-employed person who has some problem that's connected to trade because the nature of their business, they owe some company for goods that they got on credit and they don't have the money to pay it back yet. And so that's affecting your mortgage. And so they say, Mr. Jones, why aren't you paying your mortgage on time? Man, I can't, I need a shipment and I can't get it. Nobody will give me credit, blah, blah, blah. And then you might even say, well, have you thought about signing or asking for trade credit? Sorry, trade acceptance? And I said, trade acceptance, what's that? And I says, hold on. Then you pull out your manual, this one, and you dust it off and say, why don't you go and ask your seller if you signed an actual document, whether or not they would give you the goods that you need, because you would be more committed than under normal trading conditions. Okay. The point I'm making. Question?
Yes, Mr. Wilkinson, I have a question.
Yes.
So with merchandise credit, I know that like for contractors, right?
Right.
I'm wondering if this would come under merchandise credit or no, I'm guessing this would come under merchandise. So sometimes, like, let's just say they go through someone that's going through the bank. And usually with banks, when they're granting loans for construction, the contractor usually injects money first and then they pay them. So they pay them in stages, but usually they pay them once the stage is completed.
Right.
So with contractors, when they have a relationship, let's just say they have a relationship with JBR, or they have a relationship with Kelly's Lumber and materials on credit, would that merchandise credit?
Absolutely. I couldn't think of a better example myself. And I love it that you chose something locally here at home so that everybody could see that, yeah, we see the word American showing up and stuff, but it's equally the same Bahamian. And that is a perfect example of merchandising or trade credit. Couldn't have picked a better scenario myself. Where that contractor goes and says, man, I've been with you guys forever. I brought you a whole lot of business. I need $30,000 worth of goods. And as soon as I get my drawdown from the bank, I will come back and make good on my commitment. And because JBR no doubt has had previous positive experiences, see, just as the way we opened up earlier, JBR is going to say what? We know him or that company. Go right ahead. That's why it's so important when even just like in regular credit that you guys are familiar with, in trade credit, what's the key word I said for both sides? It starts with T.
Trust.
Trust.
Yes, trust. Because I'll tell you, the minute a contractor breaks his word to JBR anytime in the future, they are going to be very reluctant to accommodate them again. Okay? So whatever you say you're going to do, you have to do it. Okay? If you're going to maintain positive credit status, even in the merchandising world, as it is with other financial lending, by all means. The bottom line is trust. Unbelievably important. A lot of people make the mistake thinking that they can get away. We call it in the Bahamas being slick and breaking trust and thinking, well, I'll just go somewhere else and go somewhere else. But if you keep doing that, soon word will get out that you are what? Untrustworthy.
Worthy.
Yes, sooner or later. And then your sources are going to dwindle slowly but surely. It's like when the world brands you as a liar. Even when you tell the truth, people still believe you are lying. Because somewhere along the way, you got the reputation for being a liar. And just like trust, that reputation sticks. And all you try to tell the truth, I'm not lying, God knows it. Doesn't matter how many times you say God, people can still walk off and say, yeah, he's a liar anyhow. I don't care what he says. And he might actually have changed. And that's the problem with trust and lying, even in the business world. Once you develop a reputation for that, dog eat your lunch. That will hound you, even after and if you change. Because some people don't change, they're perennial credit breakers and liars for sure. But some persons actually change. But once you get a reputation, it's hard to break, as is trust. When you break it, trying to reestablish trust is a hell of a nightmare. Okay, for sure. All right. Okay, Ellen, are you there?
Yes, I am.
Great. Looks like you're going to take us to the end of our evening. Why don't you pick up right on page 8?
Okay. Terms of,
Beginning with the holder at the top.
okay. The holder of a promissory note of trade acceptance realizes other advantages as well. Either instrument can easily be turned into emergency cash by sale to a third party at a small discount, or by offering them as collateral The instruments can be used to increase the bank's borrowing ability of the holder. Further, in the event the signer of the acceptance on note is either unwilling or unable to pay a due date, the holder can enforce payment through legal action.
Absolutely. So this document, whether it's a promissory note or a trade acceptance in terms of trade credit and regular credit, is a document that can, as you can see, can be used for all kinds of other purposes. Okay? So we're not just out there throwing paper around. Depending on what business you're in, this thing can be very useful to either side in the arrangement. Okay? That's the beauty of a promissory note, and even more so a trade acceptance note. Okay. All right, keep going.
Letters of credit. There is another document widely used in international transactions, the letter of credit. This is an instrument of finance initiated by a buyer through a bank, promising to pay a designated sum of money under conditions agreed upon with the seller. The application for a letter of credit details the value of goods to be shipped and describes all pertinent information, particularly a definite period of time during which the credit is to remain in force.
Mhm.
The bank receiving the application from the buyer transmits the details of the letter of credit to its correspondent bank in the seller's city and delivers the credit to the seller after the latter has complied with all required conditions. The letter of credit is advantageous to the seller because its use eliminates all credit risk. The safest letter of credit is one that is both confirmed and irrevocable. Confirmed means that the payment of the letter of credit is fully guaranteed, and irrevocable means it cannot be revoked by the buyer or the banks involved unless the seller explicitly gives permission.
Okay, stick a pin, Ella. Does everybody get this letter of credit thing?
Wow.
It's a fascinating document. Has anybody even ever heard of a letter of credit?
No.
Yeah, isn't that crazy? You've been in credit for years and years and years and years, but because you're stuck on one side of the credit world, you don't even know there's this side that exists.
Right.
And that's okay. You're not alone. Half the world or more doesn't know it exists. That's the fascinating thing. Okay. And that's the beauty of getting caught up in these kinds of sessions, because you find out some what I call other crap about what's going on in your profession. See my point? So while you're there giving mortgage loans to the bone, car loans to the bone, vacation, whatever loans they are, suddenly on this other side of the world, we have this trade credit thing going on with all these other incredible things happening. Similar, the language is different, but similar in context to the normal credit that you're used to. For example, a letter of credit really secures the seller's position, because you, for example, let's say the seller is sending goods to a country that there's always war or disruption or deception or some other nonsense going on. Yeah, Afghanistan. How about that? Afghanistan. Sending anything to Afghanistan right now, other than God's breeze and oxygen or something, is risky. Okay? It's a nightmare at the moment. But let's say there's still some trade going on. So you want to do business because you're just interested in making money. You don't care if it's Afghanistan or hell. You want to send some goods over there to make some money. Because of the nature of the situation in Afghanistan, you don't want to do normal trade, but pay me in 30 days. You may never hear anything again. So what you do, you tell the buyer in Afghanistan, you want some American or Bahamian goods, okay, like some dilly and pineapples and stuff like that. We'll send them. However, what I need before I send my stuff to you is a guarantee from your bank that I will be paid. So the buyer in Afghanistan goes into Royal Bank of Afghanistan or Bank of the Bahamas of Afghanistan and say to the bank, I need a letter of credit in favor of Kelly's Lumberyard in the Bahamas, the seller. And so his bank says, great, you need a letter of credit? For how much? He says, $30,000. So the bank will look into his account and see if he has 30,000. If the buyer has 30,000, the bank will hold it. Prepare a letter of credit, help the buyer sign it, and then send it to the seller's bank in the Bahamas. What that does, the seller's bank in the Bahamas here looks at that letter of credit, says good, the money is secure by the bank in Afghanistan. Once the banks agree that everything is in order, signatures are in place, and the money is secure, then the seller in the Bahamas will ship the goods. Because now he's pretty much what? Guaranteed. Does everybody get that?
Okay, Mr. Wilkinson, I am, okay. So for the letter of credit, when you get a letter of credit from a bank, are you requesting the letter based on what you have available on your account or what you would want to borrow from the bank?
Good question. Remember now, we are looking at the other side of the credit world, and that other side of the credit world is called trade credit or merchandise credit. Here's what happens. If the buyer in Afghanistan wants the goods from the Bahamas, because Afghanistan is so unpredictable, no person in the Bahamas is going to send their goods and on a promise to get payment in 30 days. Does everybody get that? That makes sense?
Yeah.
Okay. So what happens? The buyer here says to the seller here says to the buyer in Afghanistan, go to your bank, make arrangements with your bank to secure my payment. And the buyer will then go into the bank in Afghanistan and sign a letter of credit. Now here's how this works. The bank in Afghanistan will not confirm that any money is available until it checks the buyer's account. If the buyer doesn't have the money, the bank will not process the letter of credit. Does everybody get that?
Yes, so basically they have to have the money for them to get the letter approved.
Absolutely, it's like a debit card. Yeah, it's like a debit card. Remember, when you have a debit card, you can only charge what you have on the account, correct?
Right.
When you have a credit card, though, you can charge what you don't have, correct?
Correct.
So this letter of credit is like a debit card. You will only get what you have available on your account. So if the buyer doesn't have enough, the bank will not process the letter of credit because they don't have enough to tell the bank in the Bahamas that they can make the payment. So letters of credits will only work if the buyer has the money. The only reason why we're doing a letter of credit is so that the seller in another country doesn't have to take the risk that they may not get paid. You follow?
Right.
Especially in countries where what? It's unpredictable, like Haiti. Would you send like goods to Haiti and say pay me in 30 days?
No.
Same thing. I don't have to go to Afghanistan. We have one right in this part of our world. That's how it works. So any buyer in Haiti, if they don't have the money in their account for their business, then chances are a company in the Bahamas or anywhere else in the world will not do business with that buyer. It's too risky. Okay?
So, Mr. Wilkinson,
Yeah.
I was just listening and I didn't want to interrupt.
Anytime.
So basically, to answer our question, if that person doesn't have the money, I was listening to what you were saying. So if the person doesn't have the money on their account, they would then they can get a loan and get that money on their account before the letter of credit can be signed.
Brilliant. If they don't have the money, they can get a loan to get the money. And once the money is on the account, then the letter of credit can be done.
Okay.
Absolutely. Good question. I mean, I can't believe you guys, after all, they are actually still sane enough to think out of the box. Absolutely right. Okay. And that's kind of what being creative in business is all about. Because the money is not in the account doesn't mean the deal can't happen. Then we go to plan B, the one you just said. Go and borrow the money somewhere else and put it in the account to make the deal. And then when you get your shipment and you sell your goods, then you pay everybody off. that you borrow the money from. That's perfect and very much doable and legal. And many good buyers and companies who are buying goods and don't have the money, they do that. They just borrow the money so they can have the money in the account on their letter of credit so the goods can come, because they know once the goods get to their country, they can then sell them at very, very reasonable profits and then pay off whatever debt that they incurred to get the money. And that's how we do business all the time. Excellent, excellent. Okay, Ellen, keep going.
Terms of sale. Selling terms define the credit terms of the sale, the time period or number of days given the purchaser before payment is due. The other conditions of payment arrangements in the credit transactions are also outlined in terms of sale, possible discounts or reductions in the selling price granted by the creditor. There are, of course, other terms or conditions in a sales transaction: quantity, quality, size and color, delivery, date, and method of shipment. But when the expression terms of sale is used in the credit department, reference is made to the duration of the credit period and the amounts of percentages or discounts allowable.
Now, notice again that some of the language is different in trade credit, and some of the language is similar to credit as you know it. See? Now, these terms of sale are what you guys in your jobs call credit terms. Trade creditors call them selling terms. They are the same. When somebody comes in for a mortgage, you ask them how much do you want to borrow, correct?
Right.
How long do you want to borrow it for? That's the term, correct?
Right.
And these are the kinds of questions you ask. Okay. Can you assign your salary or payment to the bank, and so on. Similarly, in trade credit, they have similar questions. How much goods do you want us to ship? Because how much goods means the dollar value and the quantity and quality and size. And see my point? Once you decide on the goods, they're going to have all these characteristics, and everybody has to agree that whatever the buyer has ordered, the seller is sending. Okay. So again, selling terms are equivalent to credit terms in the normal lending environment. It's just that some of the components are a little different in structure, but the end result is the same. We still have a credit sale when the seller ships goods and expects to be paid at a later date. Always, always. Okay. So despite the differences in complexion, the end result is the same, and that is using trust to give credit and the expectation that payment will be made and everybody will be happy and gay. Now, does everything always go right in trade credit? No, because it doesn't always go right in the mortgage corp, at Scotiabank, insurance companies that give loans either. Okay. All right. Keep going, Ellen. Where did Ellen go?
Okay. Terms of sale are largely determined by customs of the industry. Similar terms are generally adopted by concerns within an industry, but they can vary sharply from one industry to the next. Selling terms in merchandise credit range from cash in advance to terms of 6 months or more, though the normal range is between 10 and 90 days. Some of the influences on selling terms are.
Now notice what Ellen is saying. In trade credit, we have these terms of sales that is customary. Okay. Similarly, even lenders in the Bahamas, whether it's mortgage, consumer, business, or whatever the case might be, if you notice, most of the lending institutions have similar terms and conditions because they're all in the same competitive environment, correct?
Right.
The same thing happens in trade credit. If the norm in a particular industry, like the metal industry or the shoe industry or the clothing industry, is to give 30 days credit and you only want to give 10, who's going to buy from you, right, folks? If the norm is 30, you better start be thinking about 30 or else you're not going to get too much what? Business. You follow? So just like other lenders, the credit facilities in the trade industry is based on what is customary in that industry. So you come in the Bahamas and get a mortgage loan, what is customary? 30 years, 25 years, 20 years.
Mm.
So if you try to do a mortgage loan in the Bahamas, you only can get 10 years, who's going to come to you? Only the rich and filthy famous who have a bunch of money to pay off for, you follow?
You're right.
But the rest of us, man, we're not even going to pass your office nor say good morning because we don't have anything to do with that madness. Okay? And that's how it works. All right, keep going.
The period of time during which the purchaser will have the goods, the rate of stock turnover in the buyer's industry.
Sorry, go ahead.
The times extended by the seller really exceed the length of time which the buyer needs to process and resell the goods. As a general rule, the merchandise should be resold before the credit terms on which it was purchased expire. The more perishable the commodity, the shorter the terms. Simplified, retailers of food get shorter terms than retailers of jewelry.
True or false?
True.
Yeah. If you're selling bananas, you're not going to get too long a term because bananas don't last too long, correct?
Right.
But if you're selling jewelry, man, they might give you 1,000,000 years because jewelry is not going to spoil, correct? Or like we say in the Bahamas, spile. Does anybody say that anymore? Don't let it spile.
That's nice, but
Yeah.
spurred.
Yes,
I know.
spoil.
Not spile, spurn.
Spurred.
Depending on depending on which island you come from, it'll be spurl, and depending on and then in the other island it'll be spile. So in New Providence, you'll probably
Which
get
island that is to say smile?
spile, probably maybe a cat island or something,
Oh.
perhaps. Yeah. Or maybe a strange Abaconian even, or a Long Islander, yeah, from down in the thing where the goats are or something, depending on where.
The Conky Joe.
Yeah, the country, yeah, the country is inspired. Okay,
Don't put us in there because we don't say that. Long Island people.
You know, Alpaco.
Long Island people don't say that.
No.
Uh, what does Long Island people say?
You may hear them say spurn, but not
Spurn.
spile.
But no spile.
No.
Okay. Yeah, that must be the Long Island from my grandmother's time back in the day. Yeah, yeah, they probably don't say that anymore. They'd be insulted if you say they say that. The worst they'll get in Long Island is probably spurl. I wonder what they say in like Eleuthera. Anybody knows? Eleuthera. What do you think the Lutherans say? Spurl. Yeah. It's fascinating how we are one country, but every island is unique. Isn't that amazing? Grand Bahamians hate everybody in the Bahamas except Grand Bahamians. When I say that, I mean in inverted commas. They're peculiar people. Papagonians have their own little thing going on, like we could look after stuff. And then Nassauians, like we're like more eclectic. We like a strange combination of several islands. You know, we'll go with you and you and you. But Grand Bahamians don't want to come to Nassau, and Papagonians don't want to go to Grand Bahama. Or now everybody have their own little thing. Cat Islands, like, well, it's Cat Islands, and then Long Islanders, forget it. They have their own little thing going on down there. The hell with the rest of the world. If y'all say we're Bahamian, fine, whatever.
Whoa, okay.
So yeah, we're a very unique country. When you start analyzing it like a credit proposal, see? Aha. Once you start analyzing it, then you start saying, oh, damn, I didn't realize we were that unique. All right. And even in some cases, even within the island itself, for example, in Eleuthera, you go to certain parts of Eleuthera, they sound like Americans, like Americans sort of thing, because they pick up that American thing from the Lutheran adventurers long time ago. Then you go to another part of Eleuthera, they sound completely different from that gang in the north. And it's fascinating. So when you go from one end to Eleuthera to the next, it's, oh, you're from north. And it's, how do you know? The way you talk. You talk funny. And they say, well, you talk funny too. But they're all from Eleuthera. How about that? Okay, keep going, Ellen.
Okay, the extent of competition. The more competitive the industry of the seller, the more liberal the terms. The less competitive the conditions, the shorter and more restrictive the terms. In periods when a buyer's market exists, selling terms tend to be longer.
What is
When
the
the
word
business-
name? Sorry, liberal the term.
The more liberal,
Mhm.
yeah, liberal means the more open or free.
Free.
Yeah,
Okay.
yeah, and I'm glad you raised that because we're saying if there's a lot of competition, you'll be more open to give credit than say we don't give credit because the competition is out there, and if you don't give some credit, you're going to what? Die. Because nobody's going to do what? Come to you. People are going to go to where? Where they can get credit easier.
Liberal.
And if you make it too difficult to get credit and everybody else is making it easier to get credit, you may not be in business too long. Does everybody get that? Okay? Just like you guys who are lenders. Okay? Maybe not mortgage corporation because they have the government backing, so they have a little latitude. But for other lenders, they can't do anything they feel like.
Well,
So
I work at Greenleaf Financial, and
Yes.
we have modified our terms and conditions based on competitors as well sometimes.
Absolutely. Otherwise, you will not have customers coming to you. And when customers slow down enough, you will have to close your doors. All right. So if your competitors out there in the banking industry is charging an interest of 5%, and you have your big time 8%, who's coming to you unless they're desperate? Okay.
Right.
And so then you'll have to modify.
What is
Okay?
Greenleaf Financial all about?
I'm so happy that you asked that because Bahamas Corporation, I wanted the opportunity to say that. Actually, Bahamas Corp is on our listing because we have a group of listings that we go by. We do small consumer loans and consolidation. We can go up to 30,000, or you can do a home equity loan.
Kiss my foot. And what kind of collateral do you guys need?
Well, preferably like for larger loans, we hold life insurance or car, or like sometimes they'll hold property depending on the type of loan that you come in for.
Kiss my foot. So why are you guys so quiet? Nobody knows you're out there.
Really?
I've
Apparently
never
not.
heard of Greenleaf Financial.
Yeah,
Wow,
I
and
know.
y'all on
Something
our
like money
listing.
manager.
I've
Y'all
heard of
something like
listing.
money manager.
I've
Uh,
heard of Greenleaf, but it seems like it's another Greenleaf that does the opposite thing that you guys do, because y'all are like a savings kind of situation, right?
No, Greenleaf, they have Greenleaf Designs that do interior decorating, but
Right.
this is Greenleaf Financial Services.
you guys have a
Once you
website? You guys have a
on a job a
website?
minimum of 1 year, pardon?
You guys have a website?
Yes, we do. You can go at greenleaffinancial.com.
Sonia,
Yes,
Sonia,
sir? Hey,
do not tell me. You have my email, right?
yes, I do.
Please send me an email with your website, this, that, anything you need. That.
Now, the only thing, Mr. Wilkinson, because I hear you talking all the way back in the day. As long as you don't exceed 65, and you're not contractual and it runs within your contractual terms, we do government and some private companies, and we don't do self-employed persons. We're salary deduction based only.
Kiss
And
my
we
foot.
don't do standing orders also.
Now, see, that takes us to the fourth line of paragraph 2. That word called restrictive, which is the opposite of liberal.
Girl.
Okay. Now,
What's the interest rate? This Tanya?
Hey, right here.
What's the interest rate? What's y'all interest rate?
Okay, for Bahamas Morgue, I think y'all will fall under private. I don't know if private government, but y'all private, right?
We quit that.
Yeah. Okay, so that'll be 18%. Government is 16%, and private is 18%.
And what's the,
These
if
are
I just,
consumer loans, right?
We don't have a set payment on our amount. It's tailored to the person, job, tenure, and salary. So
Right.
everybody doesn't pay back the same amount. It's based upon what you're qualified for and how we can assist with payback,
Yeah, your individual situation.
individual situations.
Indeed, indeed.
So what
So,
is the turnaround time?
The turnaround time is 24 to 48 hours.
okay,
Providing that
good.
you bring in all the necessary documents, you can actually get a loan same day if you have everything with you.
Stop the madness. So let's say, for example, all hell breaks loose in a particular month and somebody needs $7,000 and they meet all the criteria, they can come in, grab and run.
As long as they have all the requirements and everything, like if let's say you come in from early morning and you get in everything, you can get your loan before the end of the day as long as management approves it.
Especially if you can get a payment or salary assignment.
Yeah, salary deduction.
Yeah. Suppose, let me throw in something creative. Doggone it. I told you this credit and collections thing, you learn all kinds of crazy stuff. Suppose, Tanya, somebody, it's back in the day. Yeah.
Sorry, I didn't mean to offend you.
No apology accepted. I am more than pleased to have gotten to this point in my life. Every day, at Thursday, I pick up the newspaper. I see so many young
Yes,
people
yes.
who will never get married, never have children, none of that stuff. So trust me, no need to apologize at all. I am so happy that God has blessed me to even get this bloody far. Okay, so not a problem. But let me throw a little something in there. Let's say the person is 68, right? I'm not 68 yet, but let's say the person is 68 and they come in and say, I need $5,000. And then you say, sorry, you're over 65. But they say, but I'm receiving my pension from whatever source and you can get a payment assignment from my pension. Would you do it?
That pretends that that actually, well, certain companies we do that, but other than that, what I would suggest is that you call in the office and allow management, or you just call in the office so we can see how best we can assist. Because I would always suggest that you get an answer before you say, hey,
Well,
it's a no. But
yeah,
with pensions like that, I think with certain companies we do that, pension assignments, but
yeah,
no, not
yeah.
and
Well, if you guys don't do it as a normal cause, you are ignoring a huge market that can make you even richer than you are.
yeah,
Because there are a lot of people, for the most part, their pensions are for the rest of their lives until they die.
yeah,
And those
especially
pensions,
police officers and stuff too.
all government departments and all persons who receive national insurance after working 40 years. See my point?
Yeah,
All right. Just
I
thought
can find, that's a very good question. I can actually find that out and have
yeah,
a
and if you
response
guys
to that
start
for you.
making money, please tell me, let me send you my PO box, send my check there.
Okay.
All right. So yeah. So those are some good points. Because first of all, somebody wanted to know what do we mean by liberal? Liberal means open and easy to get. On the other hand, Tonya comes up with, yeah, we'll do it, but under these conditions, so they are more restrictive than other lenders. Like only we can get a payment assignment. Other lenders, they don't only have the only feature. They give loans to people who do not assign salaries. Otherwise, their portfolios would be severely restricted too.
Yeah,
Okay.
we could go up to 30,000 as well.
Absolutely. So even though they tornadoes have the blah blah blah, there are certain restrictions, and their restrictions are for their benefit. Their restrictions, no doubt, are unique to the business that they're doing, because they cannot be so liberal. See, whoever asks about liberal, because if they're too liberal, they're not going to last too long. Okay, so they have to have, yeah, we'll do it, but these are certain restrictions that we have to put in place to control and preserve and protect our investment. Okay. And so this is kind of what happens in the trade industry as well. So notice all of this other traditional banking lending stuff came out of our discussion on what happens in the trade industry, where companies, between companies, have liberal and restrictive programs as well. And if your competitors are liberal and you're not, dog eat your lunch. If your competitors are restrictive and you're liberal, dog eat your lunch. Everybody has to move in the direction of each other. Otherwise, there'll be some casualties. And that's how it is in business in general, okay? By all means. If tornadoes decide that they're not going to have certain restrictions, they may not be in business as long as they want to, because they don't have the strong probably $1 million capital base where they could lose a bunch of money overnight and still function like a Scotia mortgage corp who's backed by the government, Royal Bank, crap like that, and big time insurance companies. Okay, by all means. All right, keep going, Ellen. You started this stuff anyway.
Oh, maybe you stop.
Number 3.
Number 3, the credit. We stop in periods when a buyer's market exists. Selling terms tend to be longer. When the business cycle swings the other way, selling terms tend to be shorter.
Okay.
The credit standing of the customer. There is a direct relation between terms granted and the seller's opinion of the ability and willingness of the buyer to pay. Each industry has its normal or regular credit terms, but the credit department of a supplier may alter terms to suit its appraisal of the individual credit risk. The credit department could, for instance, insist that the terms of a sale be changed from 60 to 10 days or to some form of cash terms.
And this, of course, is in trade credit. We do this in normal other types of credit, buying credit too. It's just using different terms and conditions. But the principle of credit granting are the same. You have differences in product, in terms and time and rates and all that stuff, but the principles that govern the process are unbelievably the same. Okay, keep going.
Number 9, discounts. There are 2 components of selling terms: the period of time before payment is due and the discounts which may be allowed. There are 3 types of discounts. 1, the cash discount, expressed as a percentage, is the deduction the buyer is permitted to make from the invoice price if the invoice is paid within a specific period of time. This period is shorter, of course, than the maximum regular.
Regular, let me just pull up. Okay, 1 second. Okay, regular, yeah.
Selling terms of the goods. This cash discount is offered in some industries, but not all. Where it is offered, it is a reward for quick payment, and the period for which it is granted is seldom more than 10 days.
Have you guys ever had any cash discounts in your normal day-to-day life? From anywhere? Does anybody give cash discounts like they take off 5%?
Only if you're making like school payments, I would say with some colleges and stuff, if you're paying in cash, they'll give you a discount.
Yeah, if you pay in cash, they'll give you a small discount. Nothing big to shout about. But some people have enough money where they can pay the full thing in cash and take advantage of the discount. The rest of us have to suffer. We can't pay anything in cash. So the hell with the discount. In fact, if you add interest on it, we pay that too because we don't have the money to pay it in cash. And that's just the way it is for a lot of us. Those persons who can pay in cash in any kind of industry and end up getting certain benefits, and those of us who can't have to suffer the consequences. The cash discounts, yeah, primarily so that persons will pay quicker and pay in cash. Okay, number 2.
Number 2, anticipation. Permitted in some industries is not shown as part of the selling terms, but rather as a notice elsewhere on the invoice. It permits the customer to deduct interest at a specific rate per annum for the number of days by which the customer prepays, anticipates the invoice. If the buyer receives an invoice bearing 70-day terms and pays in 40 days, the buyer has anticipated by 30 days and may deduct the interest charge for 30 days or 1/12 year.
So you notice out there in this trade industry, they're doing all kinds of fancy credit stuff. Do you see that? And they have their own little individual stuff. Just remember when Tanya said, yeah, we'll do it. but we have a limit and we have certain restrictions and we do it this way, but we'll do it. And so it's the same kind of thing. Out in the industry, all these things are happening because other persons in the industry are doing it. And these are all what? Incentives. This anticipation is similar to a cash discount, except that this number two is not about paying in cash. It's about if you're supposed to pay in 70 days and you pay in 40, then you can take out a certain amount off your invoice. Okay? Or if there's an interest charge, we'll reduce the interest charge by a certain amount because you paid off sooner. And so it's an incentive. In the first case, it's an incentive to pay in cash. And in the second case, anticipation, it's an incentive to pay when? Sooner. Okay? And so this kind of like the collection side of what the traditional lender has, because these sound like little incentives that we'll give on the collection side sometimes, like if you come in, blah, 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 we'll make some arrangement, whatever the case might be. Same thing happens in trade industries. There are benefits to taking advantage of certain things. All right, and then number three.
There is another group of discounts which are not inducements for early payment. These are called trade discounts. In some industries, a buyer might be offered a discount, one for acting as a distributor for a manufacturer, or two for purchasing in large quantities. A 10 and 10 trade discount may be given a wholesaler who acts as a distributor and also buys in carload lots.
We'll see what all that 10 plus 10, 10, the Bible 10 means later. Okay. Do we still say 10, 10, the Bible 10? No?
Oh, no.
Kiss my foot. Can't believe I've been around this nonsense that long already. Okay, keep going, Ellen.
Before citing some examples of selling terms, let us sum up the subject so far. An invoice representing an open account transaction will carry terms of sale. These terms should clearly state the cash discount, if any, and the length of time permitted for making this deduction. Selling terms should also clearly state the length of time to maturity when payment of the full invoice is due. If a trade discount is allowed, it should be part of the selling terms on the invoice. Also, if trade practice is not firmly established, the invoice should bear a legend indicating where the anticipation is allowed.
Thank you very much, Ellen. We are going to stop there. You guys have been more than fantastic after a long day and sitting through all this heavy stuff. Some great questions were raised. I was happy that we were able to get Tanya to tell us about grain leaf. So when I saw grain leaf, that reminded me of a movie that was on sometime. Anybody saw that? Green something? It was a grain leaf.
Yeah.
Green leaf.
Yeah. Any more episodes? Any more episodes out yet?
No.
What the hell is I waiting for?
I
So
know
the-
the past I'm dying of then.
Can you believe that? Oh,
Wow.
funny. Just when Mama wanted to settle down and do what she's supposed to do.
Uh-huh.
Yeah, that's why you don't do nonsense, because you don't know. I always tease my wife of many decades. I said, don't you mess with me. You don't know which day I'm gonna drop dead and leave you in this miserable world.
Oh, wow. That's a serious thing.
No, you're gonna be here for a long time. I said, really? Don't bank on it. And furthermore, when you hear me hit the ground, don't try to revive me. I'm going to bite your finger. She thinks, don't wake me up. All right. So yeah, the point I'm making is that's deep. We have to don't take things for granted. Really, that's the whole point. All right. So we're gonna stop there today. When we come back next week, Wednesday, we'll finish up the few pages that we have left in this particular series. Somewhere between tomorrow or the next day, I'm going to send you the material for next week. And so we're going to just keep on trucking through this madness 1 week at a time until we finally get through it all. You guys have...
Mr. Wilkinson,
Sorry?
I thought this was all the notes until midday.
I
was so happy.
No, hell no. That would make it. I know what you mean. That reminds me of when I was in university. Every bloody semester, the textbook was thicker and thicker, and I'm like, man, I'm paying to torture myself with all this bloody stuff. All right, but that's point well taken. But no, you have a couple of more interesting sets to go. Another 3 or so before we break to do our midterm. So what I encourage you to do is do not wait until the last minute to start preparing. Like how we're just about done with this stuff, start reviewing, making notes, important points, stuff like that. Do not wait for the last minute. So every week we go over a particular chapter. You use that week coming to make notes, start studying, that kind of stuff. So when week number 6 roll around, you're not trying to push everything into a few days and just make yourself totally miserable and everybody around you.
Mr.
Okay?
Wilkinson, I
Yes.
have two things. I don't know if it was Leslie. Leslie, you were asking me a question, but we also do persons on the family island. If you're interested, we can deal with anyone on the family island as well.
Okay,
Uh,
Leslie, whoever's on the family island.
through the online site, we can deal with them as well and deposit it to your bank account.
Absolutely. Or you, even if you're not on the family island, you might have what? Family on the family islands who
Yes,
might
sir.
want to take advantage of that service. I don't know who's marketing your stuff, Tanya, but you guys, that you do have a market out there, so you need to start making noise, start beating
Yes, sir.
drum, throwing conch shells, making a fuss, let people know you're there, so that even if you make a few splashes in newspaper, like where
Mhm.
people could see it and say, wait a minute, doggone it, because what you're doing is kind of a little non-traditional financing, and a lot of people are very interested in that kind of stuff because they don't really need to go into a traditional financial institution and get caught up in all the heavy shooting stuff. They just
Yeah.
need to come in and get some relief and pay it off and then wait for when they need relief again. You know, like for example, somebody gets sick and then they have to go to doctor's office when they $5,000. Oh my God,
Yeah.
like that. So excuse me, Tonya, this
Yes, sir.
let me see. Let's use it. This Ellen, I need
Yeah.
okay, kind of thing. So yeah, make some noise. I'm sure that there is a market out there for that kind of stuff, present and future. All right, so you guys be safe.
Mr. Wilkinson, one more thing.
Sure.
So the books, we having books available, or you're just going to continue to send it on
I'm
email?
just
Because
gonna
some of the pages I'm still missing.
you're
I don't know
missing pages?
why. Yeah, like that's why I asked you to do the share screen because
You
I
shouldn't
couldn't
be
get some of the
missing.
the pages.
How come?
I don't know. And I open it
Anybody
up on my Gmail.
anybody else has that problem?
Oh my God.
No.
No.
Tanya,
Going back.
something weird must be happening on your side of the fence.
Probably.
That's weird. So when you open it up, you don't get, like, for example, for this session, you don't get 13 pages?
No, when I open up your email, I see research paper, I see course outline, and I see there's a PDF start with understanding. And that
Oh,
start,
Did you
no,
roll up?
yeah, I did.
no, Tanya,
Scroll to the left.
It's
Tanya,
2
Scroll to the
emails.
left.
Tanya,
Hi.
Tanya,
Hey, right here.
listen carefully. The reason why you're not seeing it is because I sent you 2 emails.
Oh, I don't see that second email.
How come?
Wow. I don't know if you see me in the second one.
No, you got the first one with the research paper, right?
Uh-huh.
I sent the notes to the same email.
I'm reading that email, and the only thing with the PDF, it's saying understanding and only giving me one chapter. And I downloaded as I open it in what it called Google Drive, and the thing still ain't going down. It's still only giving me one chapter, and it's stopping to credit types of credit that one paragraph.
No, what it's giving you is
Danielle
just
had
one.
the same problem, right?
Yeah, that's what I was trying to tell her. When I got the email, I only saw the 2 at the bottom, but when I looked further up, They
Uh-huh.
were side by side. So I kept scrolling to the left and it was coming sideways instead of like when you open one, all the pages don't open. You have to click on each one, like go to
Right.
the left, they side by side.
There you
So,
go.
see, I trying it. Let me see.
You
Let
have
me see.
Gmail, you have Gmail or Hotmail.
I have Gmail I'm using.
That's how my Gmail came out. Like two of his emails was in my one email, and you have to just open up each message in one, and then mine came side by side. So I had to keep scrolling to the left, and then everything it showed me the different pages.
No, mine
Absolutely.
they
Because
don't
in
like
the
that at
beginning,
all.
you using your phone or computer?
I'm on my laptop
Then you
because
Oh,
should,
because
even
when
yeah.
I did mine on the phone, it didn't come out. But when I went on the laptop and I opened it, all of the pages came out, and I didn't have a problem after that. I
yeah,
just kept going to the left. They were side by side.
yeah.
Oh,
For some
wow.
people or most people, it'll be side by side because it's the individual
Yeah.
pages and they total 13 altogether individual sheets.
Okay, Mr. Wilkinson, can you try sending it to me just in case again? And if that one is unsuccessful, I'll just let you know. Or the other case, are we able to get a book from the office or not this time around? We just to print these out and go
Yeah,
like that.
you're gonna create your own personal booklet every week.
Okay.
Every week that I send you material,
Mm-hmm.
you can create your booklet up, put it either in a folder, a binder, whatever is good for you, or just
Okay.
accumulate them all until the semester is over. Then create a binder and keep it for reference purposes. So you'll create your textbook by the end of the day.
Okay.
Okay?
All right.
So just print them off and keep them in the order that I sent them. And by the end of the semester, you will have your book and your reference material all rolled into one. All right.
Yes.
So I'm going to try sending it to you again, Tanya. If you don't see it from me in 24 hours, send me a note like, hello, can you please try it again? And I'll send it to you and you can let me know if it works out.
Yes, sir. Thank you so much.
This time when you get it, yeah,
Mhm.
do a little, yeah, a little whatever side by side, check it, move it, and maybe you have to play with it a little bit. But let me send it to you again and see if it'll work for you ultimately.
Okay.
Okay?
Thank you so much.
Yeah. So when I send the second bit of material, I'll send that to you as well, and you can let me know if you were able to open it up.
Okay, will do. I'll just put receive with thanks and I'm able to open it.
Perfect. All right. So you guys take care. And if you don't
Right.
get your second set of notes by Friday, somebody send me a note like notes, please. Because sometimes I still get more busy than I should be for some reason. All right. And then I'll certainly be sending them to you. Okay. So you guys be safe out there. Please get back in one piece next week, and I'll see you then.
Okay.
Likewise. Good night, everyone.
Good night. Good night.
Good night.
Good night, everybody.
Good night.
Good night.